Yes, people, a very happy morning, all of you. So, guys, we're doing this chapter called as preparation of the financial statement of companies. That's right. So, let's do a quick recap of what we studied in the last class. So, guys, the format of the financial statement is being laid down in which act? Companies Act 2013. Where in Companies Act 2013? Sir, under Schedule 3. Okay. Under Schedule 3, how many divisions are there? Three divisions are there. Not part material. It is division. Division 1, Division 2, Division 3. Division 1, the format which is laid down in Division 1 is applicable to whom? Yes. Those companies who are supposed to follow accounting standards. Sir, how will we know that which company is supposed to follow accounting standard? I told you I'll be taking a separate session on accounting standard, on the applicability of the accounting standard, on the applicability of the Ind AS. In that session, you'll get to know to whom AS is applicable, to whom Ind AS is applicable, and for whom not applicable. I'll be discussing in detail. As of now, Division 1 we are learning. As of now, Division 1 we are learning. The format given in Division 1 is applicable for the CA Intermediate Advanced Accounting. This is applicable for those companies who have to follow accounting standard in preparing the financial statement. What is Division 2? In Division 2, the format which has been laid down is for those companies which has to apply in AS. What is Ind AS? How it is different from accounting standard? What is IFRS? Comparison between the three will be given in the that is introductory part of the accounting standard. That time I'll discuss this part. The format of the Division 3 is applicable for NBFCs. Any problem? No problem. So your Division 1 is applicable at the CA intermediate level, whereas Division 2 and 3 is coming at the CA final level. I'm a little skeptical if this is there in CA final or not, but for sure this is there in CA final. Now, the meaning or the definition of the financial statement is given where in Companies Act 2013? Section 2, subsection 40. Okay. Is this inclusive definition or is it exhaustive definition? Inclusive. It is inclusive definition. Inclusive definition means what? I can keep on expanding the meaning of it. When I say something is exhaustive, means what? That's all. You cannot, understand the true meaning of it beyond the meaning what has been given in the respective act. That's all. Meaning means what? That much. Financial statement means that's all. What they have said is financial statement. You cannot construe anything extra. But when I say financial statement includes, means what? I can keep on adding few more points to it. I means Companies Act. So the financial statement of a company includes how many documents in total? 5 documents in total. The first document being balance sheet. The format of this is given as where? Part 1 of Schedule 3. Then comes your statement of P&L, shortly and sweetly called as SPL. Which format it is? Where it is given? Part 2 of the Schedule 3 it is given. Then comes your cash flow statement. You have to prepare as per Accounting Standard 3 revised. This is applicable for all companies. The answer is no. To whichever company is applicable, you'll apply the cash flow statement. Otherwise, not. Sir, how will we know? Where will we get to know about this? When I discuss Accounting Standard 1, that time. Second, when I do AS3 cash flow statement revised. These are the two places where you'll understand which company is supposed to prepare the cash flow statement and not. Then your statement of changes in equity. This is also to be prepared only if applicable. Otherwise, not. Last is notes to accounts. The explanatory notes means what? Whatever data you presented in the balance sheet in the P&L, the explanatory note of that, the breakup of that has been given in notes to account. This is mandatory. So balance sheet, statement of P&L, and the notes to account is compulsory for everybody. Any problem in this? Online people, any problem in this?
No, sir.
Okay. Provided that the financial statement of a company or the following company may not include the cash flow statement. These companies will not include the cash flow statement in their financial statement. Who are they? One person company, small company, and dormant company. About this, we'll discuss in deep when I come to the upcoming sessions. My question goes to all of you. The financial statement that you prepare is for whom are you preparing? For those 7 people. For those 7 people who are preparing the financial statement. So in the last class, we discussed who are those people and why are they interested in the financial statement of the company we discussed. So this data, when it is given to the users of the financial statement, those 7 people, they can take some important decisions, whether to stay with the company or not, whether to deal with the company or not. So they have to get a clarity about the how about of the company, how the company is doing. They have to get a clarity of it. So now it was a responsibility of the Companies Act that they have to give us such a structure in the format which ensures transparency of the financial information. Correct? What is the primary objective of preparing the financial statement? To ensure Transparency. Very good. Transparency means what? Whatever information is being stated in the financial statement, it should be transparent. There should not be any hidden agenda. It should be transparent. It should be free to understand. Correct? So one, you have to ensure transparency. Second objective of preparing the financial statement, understandability. The way you present the financial statement, it should be simple so that people can understand. That is why they have adopted statement form of presentation. If you see in the financial statement of a sole proprietorship concern and partnership concern, we had T-shaped accounts where we had to understand what is a T-shaped account, what is the meaning of debit, what is the meaning of credit, what will come on the debit side, what will come on the credit side, why gross profit is coming here, why gross loss is coming here. The structure was very complicated, which could be understood only by the person who's doing accounting. But we understood also in the last class that how, if you adopt a financial statement not in T-shaped format, but in statement format, how a common man can understand the financial statement. So these 7 people are not experts. They are not CAs. These could be general public who are non-CAs, non-commerce oriented people. So now the structure what you have to give should be simplified in a way that it can understand. They can understand the financial statement. So the second objective of preparing this kind of financial statement was to ensure there is understandability of the statement. Third, reliability. Very good. The Companies Act had to ensure that whatever financial statement has been prepared, for that matter, not just company accounts, even ICAI, who has been preparing accounting standards, the responsibility of the people, those who are suggesting accounting standards, to ensure that the data what is presented in the financial statement, the data which is disclosed in the financial statement, people can rely on that. It should not be fake information. It should be reliable information, because based on that, those 7 people will take decisions. Correct? Fourth point. What is the objective of preparing the financial statement? Comparability. Comparability. The financial statement that you prepare should be, in a way that you can compare your data of current year with your data of previous year. You can compare the data of your company with the data of that of your competitors. It should be comparable. So the underlying base what you prepare should be same. So that once you take the financial statement of one company and the other company, it can be compared. So comparability was the next target. When I'm telling this is the objective of not just financial statement, this was the objective of the entire accounting principles, policies, what we are studying. The responsibility of them also was to comply all these things to ensure transparency, understandability, reliability, comparability, and the fifth one is relevance. The data what you should present in the financial statement should be relevant to those 7 people. If you give irrelevant information, then what is the use? So the data in the financial statement should be relevant. Will you forget these 5 points? Very, very important. You can never forget till end of your life. If you keep these 7 objectives in mind, remembering the disclosure requirement of the accounting standard becomes easy for all of you. Remembering the disclosure statement of the Schedule 3 will become easy for you. If you understand the emotion, the feeling of those 7 people, there is no need to buy hard. You'll understand, oh, this is why we are preparing it. A lot of people say that Schedule 3 is a format given by Companies Act. Don't apply your mind. Don't apply your concept. Just by heart the format they say. I totally disagree. If you want to really understand that particular subject, you need to get into the shoes of that person who's created the law. The person who's created the format, he has got one understanding. No, if you also get that understanding in your life, from here you can travel to this level, top position. You should have leadership value, leadership vision. If you are just a format mugger, then you'll become a CA, no doubt, but you'll be at this level only. If you want to create impact in the industry, if you want to become one top notch in the industry, you need to think like a leader. You need to understand like a leader. You need to have a perspective, not just your own perspective, also the perspective of large audience. Only then, from here, this level of CA to that level of CA will become. So we saw who are those 7 users and why are we preparing the financial statement for those 7 people. Then we start our discussion on understanding the format of what? Statement of P&L. So what is the first line item of statement of P&L, my dear friends? Revenue from operations. So I'll take a whiteboard from here. Please tell me. What is the heading? How does it look like? No, tell me the full heading of, yes. Statement of, can you write P&L? No. Statement of profit and loss for the year ended so and so. Correct? Under that, what is it? Particulars. Very good. Particulars. Then note number 31st March, whatever it is, current year. 31st March, whatever is the year, previous year. What happened? Sorry, Y and R got interchanged. Not my mistake, pen mistake. Now, what is the first item? Revenue from operation. Can you write RFO income? You can write it not here in notes to accounts. To save time, you can use RFO. But on the face of the statement of P&L, my humble request to all of you, please write the full form. I will tell you where not you can use the shortcuts. You can use it for saving the time. And where not means you should not use it. Revenue from operation. OPERATIONS. Let's say the note number what we give is note 1. So let me go to note 1. Let me go to note 1. Tell me people. Notes to accounts. Under that note 1 is RFO. You can use heading here, shortcut here. In that, what is the first item? What is the first disclosure that you'll give? Sir, I have to give information about the goods that I am selling. Sale of goods or sale of products. Sale of goods bar product. In the inner column, you have to write the gross value. Gross selling price minus sales return minus sales return. So net selling price will come in the outer column. Any problem in this? Net selling price or net selling value, not price, net selling value. Online people, do you have any problem in this? Please tell
No,
me.
sir.
No, sir.
Then, in this, whatever goods you are selling, you can show the line items independently. Which line item to show, which line item not to show. I'll be discussing that point at the end. I said, 1% of RFO or 1 lakh, whichever is higher. So I'll be doing questions based on that at the end of this chapter. That time we'll understand which product line item I should show and which not. Second is what? Information on sale of your services. Sale of services. So you are into goods business, you are into service business, you can classify them here. Third will be other operating revenue. Other operating revenue. So these both are principal revenue generating item. And this is ancillary revenue generating item. Both are pertaining to your core business. What is core business? The main purpose for which I have started the business. The main objective of the business is called as core business. In that, there are two types of income. One is principal income. Second is ancillary income. Principal income means what? I give two examples. Let's suppose if I talk about my coaching industry. Coaching fee that I collect is the principal revenue generating item. Apart from that, I also sell the books. For that also, I'm putting effort. But did I start the academy that one fine I'll sell the book? No. But this is also a part of my core business and I'm constantly working hard for selling my books. So this becomes my ancillary revenue generating item. Am I loud and clear? I gave another example of sugar industry. So in the sugar industry, when you manufacture sugar, what is your raw material? Sugarcane. When you crush the sugarcane, you get the extract of the sugarcane juice that you boil it, you get molasses and you use it for the purpose of converting to your sugar. So selling of the sugar is your principal revenue generating item, which will come here under revenue from operation. But once you crush your sugarcane, the leftover of the sugarcane is there. No, we technically call it as bagasse. That is now raw material for paper industry. So there is a huge market for it, and you get the production of bagasse on daily basis. You sell that on daily basis. So that is called as a byproduct. That is called as a byproduct. So sometime in the manufacturing industry, you end up getting a byproduct or a scrap which has got a significant value in the market. And to sell that, you also put constant effort. So that will now be categorized under other operating revenue. Means what? These are ancillary income. Sugarcane industry or sugarcane manufacturing concern, he did not start the sugarcane factory that one fine day will sell bagasse. His primary motto was what? To extract sugar out of the sugarcane juice and sell the sugar as a primary target. So that is his primary revenue generating item. But in due process, he got a byproduct, which has got a huge market. So that also is trying to sell. What is wrong? That is also a part of core business activity. But that is not primary. That is ancillary. So under ancillary, what do we have? Byproduct, or you can say the scrap, which has got significant value. I'm not talking about that scrap at what we get at other factories and offices. For example, plastic items, what you get? Here and there, the paper items, the corrugated boxes, those are scrap that you generally just sell it for chiller value. That becomes your scrap coming under other income. Correct? Here, what and all will come under other operating revenue. Trading commission. Very good. What is trading commission? Yes. When you're doing some service which gives you commission, not just once, on constant basis, you're doing it. It gives you some extra income constantly. And for that, you're putting effort. That is called as trading commission. When you do something casually, here and there, once in a blue moon, rarely you do it. Not with the intention of pursuing that business, just casually you're earning some commission. That becomes your other income. Next. Let's suppose I'm a real estate person. I invest in a lot of real estate properties, okay, and I'm or not selling. I'm giving all the properties on rent, so I'm getting rental income. I have a company, just KVA Real Estate Limited. I've invested. I've purchased a lot of property. I'm giving it on rent. I'm getting a rental income. Now, please tell me, apply your concept. Tell me, is this my other income or is it my other operating revenue? Okay, others. Think about it. No, not that is not the explanation. Please tell me others. One more time I'm explaining. KVA Real Estate Limited. I purchased a lot of assets with the intention to rent it out. With the intention to rent it out, and I'm doing it constantly. And I have a separate business model company in that name. Now that rental what I get is other income or revenue from operation? It is revenue from operation, because the core objective of that company is what? To earn the rental income out of it. If I sell the asset, then that classification is different. But the motto here is what? To rent out the premises. So for a real estate property owner, the assets what he's got, and from that whatever he's earning as rental income, that becomes his revenue from operation. Now let's suppose CA.Prathik Academy, core business is what? Coaching. But I had some extra savings. Not that way. Let's suppose this is the academy premises what I have. The example what I gave last class, the same example I'm taking. I have this premises, I have 4 classrooms. In that one classroom at the end, last is of no use. Now I want to give it as rent to somebody. Can I do that? Yes. Now that rental income what I get, is it my revenue from operation? No. I did not start this academy that one fine day I will rent out that room and earn money out of it. That is not my objective. I am not dependent on that income. If it is coming also, it's okay. If it is not coming also, I'm okay with it. So other income means what? If it is coming, okay. If it is not coming also, okay. But revenue from operation is not like that. If I say something is revenue from operation, I'm wholly and solely dependent on that. Yes, I'm putting efforts for it. So in that case, what happens? That becomes my revenue from operation. But the room what I'm giving here as a rent, I'm not dependent on that income. So for me, that is my other income. That is not the objective of KVA. That is casually happening in the course of business. So are you able to differentiate between what is revenue from operation and other income? What is difference between principal revenue generating item and ancillary revenue generating item? Are you able to differentiate the both? Yes. So here, rental income of a real estate company. Then what? Then what? Interest income of the financing business. In the last class, we understood the difference between financing business and non-financing business. What is the objective of the financing business? To lend money or to invest money. When I lend money, in return, what do we get? Interest. When I lend money, in return, what do we get? Interest. When I invest money, in return, what do I get? Dividend. So interest income and the dividend income of a financing business is what? Revenue from operation or other income? It is revenue from operation, because the financing business core source of income is what? Interest and dividend income. This financing business is dependent on this interest and dividend income. For this only they work hard on day-to-day basis, and hence these both are my revenue from operation. But on the other hand, for a non-financing business like CA.Prathik Academy, I have some surplus money. I invested in fixed deposit. I'm getting interest. Am I dependent on that interest for my running my academy? No, it is happening casually in the course of my business. So it is my other income. I invested money in the stock market. I'm getting dividend on the investments that I've done. Am I dependent on the dividend? The answer is no. Hence, for me, the dividend income is my other income. I'll be able to differentiate. You have to understand the feeling. Don't go with the little word of interest and dividend. People make you buy at the format. It doesn't work that way in CA. You have to understand each and every component in the true spirit, because you're a CA. You're going to give consultancy to people. You understand what is consultancy? Like how I am explaining you, you have to explain to people wherever required. So whatever knowledge I have here, the same knowledge needs to be transformed there also. So understand the essence of it. Do not by heart. And finally, from this, whatever excise duty is given, if these above values are inclusive of excise duty, we have to reduce the excise duty because the excise duty is not our income. We have to pay this to government. So you have to minus, and the balance amount is what is called as revenue from operation. The explanatory note has been already given here, and we have discussed already in the last class. Now comes the next point. Yes. Yes. Rental income becomes a core business activity. Correct. Now the question here is, what is being asked is a rental income for a real estate business. Now it is a main source of income. So shouldn't I put under product or services? Definitely you cannot put under product for obvious reason. Definitely you can classify this as services. There is no hard and fast rule that if I'm putting something under other operating revenue, you have to bring it here. You can show it here and you can show it here also. If you take the financial statement of different companies, slight alteration of presentation here and there, practically they have done. We are discussing the format in principle, but here you have the options to alter the presentation within this range. How much to alter that, as and when you progress, when you start seeing things practically in life, you'll get a clarity. There's so many information that I want to discuss from the practical viewpoint because I worked in Deloitte. So we've seen this day in and day out. Preparation of Schedule 3 is what? For us, 24/7 job. Auditing of the Schedule 3 was what? 24/7 job. So in the 3 years of articleship, I've learned enormously about this, but I cannot pour all the information now. At this juncture, I'm trying to share the knowledge which is essential to understand this statement without confusion. Second is to help you to prepare the exams. But as and when you practically progress, you will see a small deviations from what we are studying here. Yes.
So let's suppose I have a real estate agency where I buy and sell houses. But since I didn't sell, since it didn't go in this year, I rented it.
Correct.
Just to earn income.
Correct.
So that rental income, what will?
Now the question that is asked is, I'm a real estate business agent. Not agent, I'm a real estate business owner. I have purchased the property with the intention to sell the property. My intention is what? To sell. That becomes a product. In that case, it comes here. But imagine by any chance you've not sold it. You've not sold it, but instead you're using that property and renting it out. So again, it is one of the core activity of your business. So I will not classify that as sale of product or sale of services. I'll put it under rental income. I'll put a rental income. My suggestion is, if your real estate business is exclusively only for renting services, it comes under sale of service. Exclusive renting means when you purchase the asset, your intention is very clear. I'll give the property on rental. Then I would say it is service. You're giving service to people. On the other hand, let's suppose you purchase a property with the intention to sell, but due to your opportunity, you wanted to retain the property and rent it out. So that in that case becomes your ancillary income. I will understand the feeling and essence out of it. This understanding is important to make a decision on spot. Now, all this explanation what I gave is not there anywhere in the textbook. It comes out of pure understanding and the practical experience what you gain. And the knowledge what you gain from here, it is not going to stop here. As you do your journey in future, articleship, CA, you will see a lot of new things coming in, a lot of new things you are adapting. So in CA, that is common. It keeps on going. It's okay. Now come to other income. Interest income of which company? For a non-finance company, which is example Kalpavriksha Academy, bank deposit, others, dividend income. Now comes net gain on sale of asset and investment. To be more honest, net gain on sale of investment is a technical word they put in the Schedule 3. So here there are two opinions. Some people say that whatever the profit and loss you get, you net off both. You will be selling multiple investment, no? Some at profit, some at loss. You have to net off both profit and loss. If the answer is positive, show in other income. If the answer is negative, loss, take it to other expenses. This is one school of thought. Some people are not okay with it. What they do is they show the other income that is positive, net profit on sale of investment, they show in other income. Even if it is loss, they show that in other income as negative item. Your guidance note, which has been given by the Institute of Chartered Accountants of India, has suggested that you net off and show positive or negative value both in where? Other income itself. So in exam, you're free to do it in either ways. There is no compulsion on that. Am I loud and clear? Whenever you have difficulty in understanding any particular point, your next reference document will be guidance note, which has been issued by ICAI time to time, clarifying the doubts. Am I loud and clear? Okay. Then comes your other non-operating income. And these should be net of expenses, which is directly attributable to such income. I told you an example. Let's suppose I've rented my room, the last classroom on rent. So that rent received is my other income. And let's suppose 3 months the tenant is not paid the money. I have given one lawyer notice. So lawyer notice expenses, you will not take it to the other expenses. That expenses you will net it off from this itself. So if there is any expenses directly attributing to such income, if any expenses because of that particular income, then that expenses income should be netted off. Who is saying this? Schedule 3 is saying, because we don't want this should be shown as a separate expense. This is not the expense of the core business. It is not operating expenses. It is non-operating expenses. Then comes transfer fee, discount received, sale of scrap, bad debt required. All this we discussed extensively in the last class. Am I loud and clear? Then what did we discuss? We discussed the concept of cost of material consumed. Quickly, can you tell me the formula for cost of material consumed? Opening stock of raw material plus net purchases of raw material minus closing stock of raw material. My question goes to all of you. There are how many broad types of or classification of stocks or inventory? The four broad classifications of inventory. One is raw material, work in progress, finished goods, and stock and trade. Raw material, WIP, FG is a part of which industry? Manufacturing industry. Stock and trade is a part of your trading industry. So here, out of the four stock, which stock or which inventory are we talking about? Raw material. My question goes to all of you before that. The right term to classify this raw material as would be inventory or stock. What is the right word? Inventory or stock? Inventory is the right word. Stock reference means what? Piling up of anything is called as stock. If I pile up anything, that is called as a stock. If I pile up this remote, multiple remotes, this is called a stock of remotes. So inventory is the right word. Why do we call this a stock? Because that represents the accumulation of a particular data. So technical word is what? Inventory. Inventory means what? Leftover products. Leftover products which are due for consumption, which are due for selling. So the right technical word is inventory. Colloquially, we have said it is as stock. In trading P&L account, that is of sole proprietorship concern, partnership concern, we have adopted the word stock. But the right technical word is what? Inventory. Yes.
Stock gives a feeling as if it's already a finished good only.
That is how you interpret it, basically. So every people have different meaning of stock. So people talk stock means what? Inventory. No. Stock means what? Compilation of anything is stock. You're stocking something. But what is that stock? Inventory. Inventory means what? Only for two purposes. Stock can be multiple things. I can have so many chairs. I'm using the chairs, no? This is my asset. I can stack them together. That becomes my stock of assets. So stock means what? Representing a group of item. It represents a group of item. Inventory means what? Only two things. Either going to be used for production purposes, for consumption, or for selling purposes. So inventory is a very particular term, very what you call niche term. Whereas stock is a very broader term. Understanding this two is very, very important. You never know who will ask this question. If you go to articleship, let's say you're a senior, your junior will ask, should I call this as inventory or stock? So there, you should not just say, Illapa, inventory will tell. You have to give the justification also. So in CA, always you need to be emotionally connected with every item. Why we are doing this, what we are doing this, that essence of it is very, very essential. So now we're talking about raw material, opening stock of raw material, add net purchases minus closing stock. The logic of this also we discussed in the last class. Correct? Opening stock nature is what? Expenditure. Very good. Purchase nature is what? Expenditure. This is your total expenditure. Can I record the entire expenditure in your statement of P&L? No. If I record it, I'll be violating which principle? Matching principle. Because matching principle says that record only that part of expenses which is being consumed, which has been contributing to revenue, from which you're getting benefit. Matching principle says that if there is any expenditure which is gone unconsumed, which is not giving any benefit, in that case, that should not be recorded as your expenditure. So from the total expenditure, if there is any unconsumed item, if any expenses which is not contributing, if that item is there, from that we have to minus it. So I'm reducing the expense here. So what is the nature of closing stock in the trading account? Reversal of expense. The logic of this also we discussed in the first two classes. Correct? Sir, if I reverse this expense, when will I record this as expense? Next year, when this is contributing to the revenue. So in simple words, the expenses which is contributing to revenue of that year, which is giving me benefit of that year, I'll record in that year. Or else I will not record it. I'll record it later whenever I'm getting the benefit out of it. As simple as that. Which principle is saying that? Matching principle. Only details regarding the purchase and the consumption of raw materials recorded here. Any direct cost that is associated with the purchase of raw material is not recorded. Example, carriage inward of the raw material is not recorded here. Then where it is recorded? Other expenses. Then change in inventory. Out of the 4 inventory, 1 inventory you have taken where? In your cost of material consumed. They left with remaining 3 inventories. Those are classified under the head changes in inventories. So inventory of WIP, FG and stock and trade will be classified here. And what is the calculation? Opening stock minus closing stock. Opening stock represents expenditure. Closing stock represents reversal of expenditure. The answer is positive, then what? Expense. The answer is negative means what? Reversal of expense. In the expense category, to increase expense, add. To decrease expense, minus. This is called as total change in inventory. Any problem? All this we have discussed in the last class. I'm doing a recap of that only. Now coming back to the format. Revenue from operation, with that, add other income. What do I get? Total revenue, total income, not revenue, total income. That is the wording given in schedule 3. Total income. Any problem? Now expenses category. How many classification of expenses? 7 classification of expenses. In that, the first classification is cost of material consumed. The formula for that is opening stock of raw material plus net purchase of raw material minus closing stock of raw material. Should I add the direct expense of raw material here? No. Where will I record? Other expenses. Then comes your purchase of stock and trade. Stock and trade purchase will be separately shown, because I want to know as an investor, as a trader, sorry, as a user of user of financial statement, those out of those 7 people, I want to know what is the gross purchase done by the company. What is the gross purchase done by the company? That is net of purchase return. I want the net of purchase return. What is the purchases broadly done in the financial year? I want that to be disclosed separately here. Next is changes in inventory. Changes in inventory, which is opening stock minus closing stock of which item? WIP, FG and stock in trade. Correct? Till this we have discussed in last class, and we saw a couple of questions also based on that. Now what are we going to see is the remaining 4 items. What is the next item? Employee benefit expense. Employee benefit expense. Now coming back. Employee benefit expense means any expenditure that is recorded, any expenditure, sorry, not recorded, any expenditure that is incurred towards employee benefit, for the benefit of the employee, for the purpose of employee. If any money is spent, that is what is employee benefit. Who is employee of the company? The person who is working for the company, with the company, for the benefit of the company is called as employee. So whatever time is giving, for that in return, what do we pay? Salary and some compensation other than salary. That is called as employee benefit. So now your schedule 3 is given 4 broad sub classification under employee benefit. First one is called as salaries and wages. Salaries is something which is pertaining to your administration of the business, marketing of the business, selling and distribution of the business. Typically all the indirect expenses what we had in financial statement of partnership and sole proprietorship concern, no, that is coming under here salaries. And wages is the money that you pay to the person working in your factory. So salary and wages will come separate line item. Salary and wages to become as a separate line item. Then next comes to contribution to provident and other funds. Contribution to provident and other funds. That is, as a company, I have to contribute from my side an amount which is excessive of the salary. It is a norm which is compulsory by law. There's some law which is saying that apart from paying the salary to the person, you have to contribute something in form of provident fund. What is the purpose of provident fund? In the olden days, what happened? Yes, you said rightly. In olden days, people were not financially, prudent. So they didn't know the importance of the savings. Those who were prudent enough, they knew how to save the money. But there's so many people who were illiterate, those who did not know how to save the money. So back in those days, what happened? Whatever money they got from the employer, they spent all the money. So whenever they wanted the funds for emergency purpose, that time the funds were not available. So government saw this as a concern, and they said that going forward in future, you have to ensure that whatever salary you pay to the employee, from that deduct a portion of it. Deduct a portion of it in form of PF and remit the balance. For example, let's suppose a person is paid 10,000 rupees as salary per month. Can I pay the so let me give 15,000. Let me keep 15,000. Can I pay the entire salary one shot? No. In that, I have to withhold some amount. Let's say 10%. Example, I'm telling. 10% is example for our understanding. I'm telling. So 1,500 I'll withhold and I'll pay 13,500 to the person. Am I right? So now what will be the entry for this? Salary account debit 13,500. PF account debit 13,500. Sorry, 1,500. To cash, how much am I paying? 13,500. No. To PF payable will be 1,500. So salary is your expenses. It goes under which category? Salary and wages. PF 1,500 goes where? Will it go to salary and wages or will it go to contribution to provident fund? Are you sure? Now listen to one more point. This PF is deducted from the employee's salary and being paid to the government. So as a company, my job is of a postman. I'll get money from employee. I'll deduct the money here and give it to the government. Apart from that, now as a company, I have to also contribute to PF. So in PF, two people will contribute. One employee will contribute from a salary, and second, we have to contribute additionally. So that again is coming as PF contribution. Contribution means what? The money is contributed by employer. This is not contributed by employer. This is contributed by employee. So here, which contribution are we talking about? Contribution to provident and other funds. So PF contribution account debit to PF payable 1,500, 1,500. This 1,500 is by employee. This 1,500 is by employer. Both are liability. So on the liability side, we'll show PF payable, PF payable. Now the question is, this 13,500 will go to your salary and wages. This 1,500 is PF contributed by employer. So this will now 100% go to your contribution to provident fund. Contribution means what? You're contributing over and above the salaries. Now what about this PF, sir? What about this PF? 100% this is expense. People, the salary that I've committed to my employee is what? 15,000. In that, I'm paying 13,500 in cash and remaining 1,500 I'm depositing in PF account. So ultimately, from my pocket, how much money is gone? 15,000. So definitely, this entire 15,000 is my expense. In this 15,000, salary is 13,500, my salary and wages classification. Correct? Now, what happens to this 1,500? Will it be a part of salary and wages or it should be a part of your PF contribution? It will be a part of your salary and wages because it is a part of your salary. It is a part of your salary. So it goes to salary and wages. Whereas the PF that you pay over and above the salary, which is contributed by the employer, that goes to your contribution to provident and other funds. Am I loud and clear?
So the journal entry, sir.
Yeah.
Sir, why don't we write salary account debit 15,000 to cash to PF payable?
You can write it. So now the question what Prithil is asking, sir, why can't we record this entire 15,000 as salary account debit? Why? Because we want to show the component of the salary. So this is the pure salary component. This is the PF component. I want to show it separately. Hence, for that purpose, it is being clarified separately. Okay, online people, am I loud and clear?
Yes, sir.
Yeah.
Employees' contribution will not be entered in our books.
Employee contribution, my dear, is a part of your salary that you're paying. So now the 13,500 what you're paying from your pocket is your money, in company's money. Why? For the service you have received. This 1,500 also is the money that is paid by the company for the services received. Please tell me, when this employee had come to you, how much did you promise to pay as a salary? 15,000. So you were about to go and give 15,000 to him. But government came and stopped your hand telling that, no. Don't pay entire 15,000. Pay 13,500 to the employee and remaining 1,500 will also go to employee, but not in his hands, in his account, which will be under my control, government's control. So ultimately, company is giving the money to whom employee only know that PF account is whose account, boss? Employee account. So employer paying money to employee, the entire 15,000 is what? Salary. Whether I pay that in form of cash, kind, this account, that account, for me that is salary, no boss. Breakup is given as per the convenience of government. But for me, it is what? Expenses, salary, and wages. Is the logic clear?
So then in the balance sheet, when you put salary and wages, will you put 13,500 or 1,000?
In balance sheet, why will you put 13,500? Balance sheet 13,500 gets deducted from cash and bank. Now in a statement of P&L, what will you put? Very simple. Let me tell one thing here. Let me reclassify it here. Salary is my nominal account, debit all expenses losses. So this will go to your P&L. Where under P&L? Employee benefit. Where under employee benefit? Salary and wages. This PF, which is a employee PF, will go under where? P&L, because it is the expense of the business. Where? Under employee benefit. Where under employee benefit? Salary and wages. This cash what you have paid will be subtracted from your cash and bank, cash and cash equivalent. And 1,500 which is not yet paid, which is my current liability. What is current liability? We'll discuss in next class. PF contribution 1,500. This is also extra money I'm paying from my pocket to satisfy my employee, to satisfy the government norms. So this is also expenditure only. Where does it go? P&L. Where in P&L? Employee benefit. Where in the employee benefit? Contribution to PF. It is the expenditure. Debit all expenses losses. That is why we debited. And since this money is yet to be paid, this is PF payable. So it goes to your current liability. Any problem here? Nishi, now clear? Next is expenses on employee stock option scheme and employee stock purchase plan. I can't give too much of information at this stage because this is a in-depth, independent concept, but I can give you a glimpse of it. So this is basically a scenario where a company gives the shares of the company. The company is giving the shares to employee. Shares given to employee at a discounted price. ESOP, under that we have sweat equity shares. Shares of the company given by company to employee at discounted price. Why, sir? See, there are two types of employee. One employee who comes on time, leaves on time. Who comes on time, leaves on time. He will work that much only how much you are paying. His capacity is that much only. He is paid salary for it. But there are some type of people who are very hardworking, very smart working. Means they are willing to give just blood and sweat to the company. Means what? Giving blood and sweat means what? 1 unit of blood and 1 unit of sweat they are giving. Eh? Giving blood and sweat means what? If as an MD of the company, if I want that employee to stay back till 2 o'clock and work, they'll work for every single day. If I want them to sit and work on Sunday, they'll sit and work for the company on Sunday. Means they will not see the time. If I want them to come early morning 4 o'clock and work, they'll come and work. Means what? They're treating the company as their own baby. So for the betterment of the company, they are very willing to go to any extent. So in that case, shouldn't I give a special treatment to that particular employee? Shouldn't I reward him with something extraordinary where he gets a sense of ownership? So what do we give? We give him shares. When I give him shares, he is considered as the owner of the company, correct? No? Any person who owns the shares of the company, can I say is the member of the company? Is the owner of the company. So one way to give a comfortability to the employees, you make him the owner of the company. Am I giving him all the shares? Am I giving 51% share? No, you give in decimals. You give 0.5% share. You give 0.10% share. The fraction wise it is less only. But when you give that share to that person, he feels a sense of attachment to the company. He feels that, okay, this is my company. It is my baby. I have to take care of my company like that. He will not think about extra time. He'll go and do everything that is required to do. So now this is called as employee stock option plan. Will you get this shares just like that? Let's suppose you guys are going and working in any company. Will you get the ESOPs right from day one? No. The company will observe you. Are you dedicated or not? They'll give you targets. Are you working hard for the targets or not? Are you working only on time or beyond time also you're working? Extra time also you're working? Are you in this company for short period or long period? So they will give you some targets. If you achieve those targets, if you achieve those conditions, they'll try to put some conditions on you. If you achieve those conditions, then you become eligible to get the shares. When you get these shares, what happens? There is a market value of the shares, correct? In the market, there's a value of the shares. If it is listed shares on the stock exchange, you get the market value in the stock market. Some shares are not listed. Some public companies are not listed. Some private companies are not listed. Private companies are never listed. They are always unlisted. So their value has been derived by a valuation person. From a valuation guy, you derive the value. So what happens is the market value of the share that on that particular day when you're exercising that option, you will not pay that value. You'll be paying at a discounted value. Means what? Let's say the market value of CA.Prathik Academy Limited today in stock market is 2,500 rupees. Today I am giving you 2,500 rupees worth of shares. Am I giving it 2,500? No. I am giving this at an exercise price. EP means what? Exercise price. This I discussed in 12 CBC, the last class of 12 CBC. When I discussed company accounting, issue of share capital. In that, with sums I worked out. If you want to know more about this, there's one exclusive video on it. If you want, I'll upload on the YouTube and give it to you. In that, ESOP discussed in extensive manner. So, exercise price means what? The price that the employee has to pay. 1,000 rupees. So, which means what? You're paying 1,000 rupees. And you're getting shares worth how much? 2,500. Now, what is the difference price? 1,500 is the difference price. Who will bear that expense? Company. That is the expense on the employee stock option scheme. Apart from that, when I give this ESOP, I have some related expenditure because I have to do a lot of documentation work. No, so I need a help of a company secretary or a company lawyer. So I have to take help of those people. Now I have to pay them some fees for the work what they're doing for me. That expense also will come under employee stock option scheme. Am I loud and clear? Online people. So basically, employee stock option plan is nothing but I am giving the shares of my company to my employee at a discounted price. At a discounted price. Sir, this exercise price, can it even be 0? Yes. It can be anything. 0, 1,000, anything it can be. I'm telling you. So what is the difference price? The difference between exercise price. The price, exercise price means what? The price that is paid by the employee. If you are employee, I'm taking 1,000 rupees from you, but I'm giving shares worth 2,500. 2,500 worth of shares. You are paying how much? 1,000. I am paying how much? 1,500. So that is my expense and loss. No, where do you classify? Under employee benefit. Where under employee benefit? Under category C. This ESOP what I'm issuing to you, is it for the benefit of the employee? The answer is yes. Hence it is coming under employee benefit. Any problem? My dear online students, do you have any problem in this?
No, sir.
Correct?
No.
Last classification, staff welfare expense. Staff welfare expense. Any expenditure done apart from the above three for the purpose of welfare of the staff. For the purpose of welfare of the staff. For example, one of my top key person who's taking care of the sales department. Little bit he's unhealthy. If he dies, then who will take care of my sales? Who will take care of my company sales? So what I tell? Hello, go to gym. Go to gym. I will pay your gym subscription. I'll pay for a gym subscription. So now I'm paying 1 lakh rupees per year for that gentleman so that he can stay fit. So he's doing exercise. In that swimming package is there. Diet plan is there. Everything is there. 1 lakh rupees I'm spending for that fellow. Is it for the welfare of the staff? The answer is yes. So it goes to your staff welfare expenses. Any problem? Is this clear? Online people, is this clear?
Yes, sir.
Yes, sir.
Difference, slight difference is there. What it is, you'll understand in the upcoming sessions. Now, can somebody tell me what is or who is a director?
Employer,
No. Who is the director?
person appointed to look
By the word name, director, what do you understand?
after
He is the person who is giving the direction to the company, how a company should run, in which direction the company should run, how fast the company should run, where I should slow down, where I should stop, what type of decision making I should do. All the key decisions is being taken by a director. So there are multiple types of director. One is called as a MD, managing director. Means what? He's the ultimate person to decide things. Under managing directors, we have multiple other directors, executive directors, non-executive directors, director of the sales team, directors of the finance. We call it as finance director, accounts and finance director. So heads of the department. All these are coming as director. Now the post of director can be given by the company only under Companies Act. If you're a sole proprietorship concern, I've seen a lot of people. Some people are very fascinated by this word director. So they are a sole proprietorship concern, they are a partnership concern, but in listing there, what is their managing director? Me, partnership director. Director means it's a term that is being only given in the Companies Act. Yes. So now, director means what? Multiple type of people who directs the company. In that, the head is what? Managing director, MD, chairman. Managing director means what? Whenever all these directors take the decision making, he is the ultimate person to approve it. He is the ultimate person to approve it. Now, these different type of directors are there. No, there are again further divided two categories. One who charge salary, one who charges salary for their work, and there are some people who do not charge salary. If they are not charging salary, then what is the benefit here? The benefit is that they have also invested in the company as a investor, shareholder. So they are having stocks. So what are they getting in return? Dividend. If I'm a director of the company, if I'm the managing director of the company, so obviously I'm the person who's invested the money in the company. So I will not take the salary. I will take the dividend. Can I take the salary? Yes. The option is yes. But in law, you will understand how the salary should be paid. How the remuneration of a director has been decided, you will study in the CA intermediate company accounts law. Okay? But there are some directors who will charge salary. These people either could be the shareholder of the company or they need not be shareholder of the company. Every director should be shareholder of the company is not required. Elizabeth Kritin is coming on board as a director. Is it necessary that he has to invest in my company? The answer is no. I have taken Kritin on board because of his financial expert. I have made him finance director of my business. So in that case, I have to pay him salary. I have to pay him salary. Am I loud and clear? Online people, am I loud and clear?
Sir.
So directors of two types, one who charge salary, one who does not charge salary. Those who are charging salary, they could be a shareholder of the company, or they may not be the shareholder of the company. They may be the shareholder of the company, they may not be the shareholder of the company. But the person who is not charging salary, definitely is the shareholder of the company. Okay. Now my question goes to all of you. What is the relation between the director and the company? It is that of an employer-employee relation only. You will study in the law, you'll understand that director and the company has got employer-employee relation. But though director is being treated as an employee of the company, the person who is drawing the salary I'm talking about, though he is the employee of the company, Schedule 3 has very, very clearly said that we will not classify the directors under employee benefit. Because these are not the normal employees, these are extraordinary people. I cannot mix the extraordinary people with the general category people. I need to show directors' salary separately. Where? Under other expenses. Director salary, director sitting fees will be shown as a separate item. Where? In your other expenses. I will not mingle them under employee benefit. Even though they are employee, for the purpose of Schedule 3 classification, we will not treat the director as employee. So directors are not employee of the company as per Schedule 3. But emotionally at heart, the company is paying salary to the director. Why? Because there's an employer-employee relation. Salary itself means what? The relation is of that of employer and employee. But Schedule 3 has not considered the directors as employee. Schedule 3 says that director, you are not employee. So your expenses will not come under employee benefit. You will be categorized separately as a different line item. Where? In other expenses. I need to see you separately, not combining with these people. I want to see you separately highlighted. Am I loud and clear? This is one point. All of you are clear with this point? Online people, are you all clear with this point?
Yes, sir.
I want a loud yes from everybody sitting in the online platform.
Yes, sir.
Yes,
Now,
sir.
CA has got multiple roles. A CA can be employee of any company, or a CA can be auditor of any company, or a CA can be consultant of any company. Clear? Now let's understand about employee. A CA employee means what? My example you take. I was working in the previous company as a head of accounts and finance department. Correct? What was the document that was executed between me and the company? It was an employment contract. It was an employment contract. Why did they hire me as a CA? Because there were a lot of compliances to be done. There are a lot of financial compliances. There are a lot of legal compliances. So a CA is a person who is capable of complying everything. I used to take care of the accounts. I used to take care of the financial requirement. I used to take care of the taxation requirement. I used to take care of the law, legal requirement, everything. So as a company, whatever I'm supposed to take care, everything has been taken care of. So between me and the company, what has been executed? An employment contract. An employment contract. Am I clear? So now, when they pay the amount to me, When this company is paying the amount to me, that amount is called as what? It is called as salary. Remember, in that company, I was not the director. I was an employee. They didn't give me the word director designation. So I was a normal employee. So the salary what they paid me will be classified under which category? Employee benefit. Employee benefit. Salary and wages. Now comes a CA who is now auditor. Who is this auditor? Yes, INDEPENDENT, independent chartered accountant. Now, what is the relation between the auditor and the company? Is it of an employer-employee relation? The answer is no. Companies Act 2013 has compelled telling that every company is supposed to get their financial statement audited by the chartered accountant. The financial statement should be attested by chartered accountant after the audit procedure. Why? Because there are 5 objectives of preparing the financial statement: to ensure understandability, reliability, comparability, to be relevant, to be transparent, to ensure if these 5 things have to be taken care of. An independent auditor. What do you mean by independent auditor? A person who is not influenced by the company. As an employee, I can be influenced by the company. Correct? No? Why? Because my dad will say, I'll pay you 2 lakh rupees salary if you do this fraud and cheating. If you ensure that the transparency is not there, ensure that the financial statement has got some fraud in it. I'll do some fraud, but you should not disclose. If you do that, I'll pay you 2 lakh rupees. So, and a company has got some direct control over the employee. The influence is there. Hence, I as an employee cannot sign the financial statement of the company. I cannot sign it because I'm not an independent person. I'm a person dependent on the company. Company can influence me. And hence, as a CA, I cannot sign my own company's balance sheet. I cannot sign my director's company's balance sheet. So who can sign the balance sheet? An auditor who's independent, who's running a CA practicing firm. It could be running on a sole proprietorship basis or partnership basis, but this should be a separate firm which should be independent of the company, which means company should not have any influence on the auditor. About this in detail, where do you study? There's a subject called as audit and ethics in a CA group, intermediate group 2. So in that subject, you'll be studying about this in depth. Now the fee that you pay to the auditor, is called as audit fees. Audit fees. Now please tell me, the fee that the company is paying to the auditor, audit fee, is it paid because of the employer-employee relation? The answer is no. It is paid in the professional capacity. So this will not be classified under employee benefit. It goes to your other expenses. Whereas if a company is paying the salary to CA as an employer-employee relationship, that salary will go under employee benefit. If a CA has been hired as a consultant, then the money that the company is paying to the consultant will not be a part of your employee benefit. It goes to your other expenses. Is the concept loud and clear? Online people, is the concept loud and clear?
Yes, sir.
Yes, sir.
No. Auditor is different, consultant is different. Auditor means what? What am I doing? I'm doing statutory audit. What is statutory audit? Audit which is compulsory to be done as per Companies Act. Let's suppose you formed a Companies Act. Sorry, not Companies Act. You formed a company. Sorry. You formed a company. When? 23rd Feb 2025. 31st March 25. Till that period, you did not do any work. The company did not do any work. Means there's no sale, there is no services. Am I still supposed to prepare the financial statement, get it audited by the CA? The answer is yes. The Companies Act very clearly said that irrespective of whatever is the turnover, irrespective of what your profitability losses, a CA has to compulsory attest the financial statement. So when I'm talking about auditor, who is this auditor? This auditor is a person who performs the statutory audit. Statutory means what? Requirement by law. Which law? Here, Companies Act. Then there's something called as internal audit. There's something called as tax audit. Tax audit is a compulsion of Income Tax Act that you'll understand in tax. So like that, auditor has got multiple roles. So here when I'm talking about auditor here means for the one who's performing statutory audit. Which audit? Statutory audit. And this statutory audit is a compulsion of which law? Company law. Will you forget this point? Online people, no energy. Will you forget this point?
No, sir.
No, sir.
Finance cost. Finance cost. Finance cost. What do you understand by the term finance? Raising the funds in the business. As a owner of the company, what are the two broad category of sources to raise the funds of the company? Two broad classification.
Own capital, borrowed capital.
Owner's fund, which can come in form of equity share capital or preference share capital. And second, borrowing. The money comes from the third party. Money that comes from third party. Now, for both these cases, I'm supposed to pay the compensation. Means what? If I get money from somebody, for enjoying somebody's money, I have to pay him something in return as compensation. So if I'm taking money from bank, for utilizing bank's money, I have to pay them interest. For taking money from the equity shareholders, I have to pay them dividend. So all this is what? Finance cost. Finance cost. Dividend will not come here. When I say finance cost, the primary part here that has been focused on is borrowing. Dividend and your, that is equity and preference dividend, is a part of your item of appropriation. It doesn't come as a charge against profit. Here when I say finance cost, it is a cost of funding. Which funding? That funding which is a charge against profit item. What is a charge against profit item? We have discussed this once in 12 CBSE, once in CA Foundation. What is charge against profit item?
Compulsorily has to be paid whether profit or loss.
Yes, you have to pay that irrespective of whether you have profit or loss. Every item that you show in the trading account and P&L account is a charge against profit item. Means I have to pay them the salary, I have to pay them the fees, I have to pay them the interest, I have to pay the telephone charges, I have to pay the wages, whether the company is into profit or the company is into loss. Means what? Charge against profit. I have to record this item as against profit. What is appropriation of profit? Distribution of profit. What is appropriation of profit? Distribution of profit. So dividend is what? Appropriation or charge against profit? Dividend is appropriation of profit. Online people, am I loud and clear?
Yes, sir.
Sir.
Charge against profit is an item of trading account and P&L account. You take purchases, you take salaries, you take wages, you take commission expenses, you take rental income, you take interest income. I have to pay them Purvi irrespective of whether I have money or not, irrespective of whether I have profit or loss. That is called as a charge against profit. Then there's something called as appropriation of profit. Means what? Distribution of profit. So now interest what you pay on the funding, borrowing, is your charge against profit. That is a part of a finance cost. Whereas the equity dividend, preference dividend, what you pay on raising the funds in form of capital, is the appropriation of profit, then go into appropriation separately. Am I loud and clear? So here in the finance cost, I'm talking about the borrowing cost. I'm talking about the borrowing cost. Any problem? Any problem? The first item is interest item, interest expenses. Interest on what? Bank loan, third party loan, debenture, public deposit, whatever I do, all these are my interest. Separately classified in point number A. Directors? Directors loan. Now loan taken by director. Sorry, loan taken by the company from the director. That's what I say. Correct. So it is a financing of the company. So where does it come? Here only. Any loan you take for that matter will be a part of your finance cost. Any loan that you take, an interest to what you pay on that, interest that you pay on that, it is a part of your finance cost. Next comes other borrowing cost. Any cost that is incurred in the process of taking the loan or issuing the borrowing, that is called as other borrowing cost. Example, bank loan processing fee. When you go to bank asking for an overdraft limit or a term loan, the bank will do all the processing work. No, for that they charge a fee. So if any money that is being paid for obtaining the loan, that charges is also part of your finance cost. This is also cost incurred for raising the funds and the finance. Hence, it is a part of your other borrowing cost. Next is commission to obtain loan. Sometimes what happens? You don't have a good contact and relation with the banker. So you route through an intermediary person. That intermediary person could be any bank loan agent. It could be even sometimes a CA or a CMA or a CS. Telling that if you want a loan, if you want to go for a loan, please let me know. I will help you. Means what? He's got good contact with the bank. He knows what document to be given in such a way that the bank will process the loan faster. So if you're paying any commission to that particular CA, CS, CMA or any agent for that matter, that is also in relation to what? Raising the funds. So the commission for obtaining loan is also part of your other borrowing cost. Commission to underwriter. Who is underwriter? In case of issue of share capital, in case of issue of debenture, you have something called as minimum subscription clause, which is being given by whom? SEBI. SEBI has given minimum subscription clause. If you do not get minimum subscription, can you go ahead and do the allotment? No. So when you have a fear that your shares could be undersubscribed, to fill in a gap, you appoint one agent called as underwriter. See, if the minimum subscription criteria is not met, the underwriter will take up the difference of shares and you pay commission for that role. The commission what you pay is in relation to raising the funds, and hence this commission will be a part of your other borrowing cost. About underwriter, we have discussed extensively in two places. One in 12th CBSE, second in CA Foundation. Extensively because we had questions based on underwriting commission, both in 12th CBSE and CA Foundation. Next is discount or loss on issue of debenture. This is also a concept that we have discussed in 12th standard and CA Foundation. Means what? Whatever the debenture is issued now, when you are going to redeem in future at premium, So prudence concept says that you're going to redeem the debentures in premium. No, that is a loss. And you know that loss today itself. So record that loss over a period of this debenture life in the financial statement. Where did we study this concept? 12th and one more time in CA Foundation. This is called as loss of issue of debenture. Example, you have issued the debenture for 100 rupees. But while redeeming the debentures, you're going to redeem at 110 rupees. You got 100 rupees now. But in future, when we repay it back, how much are you repaying? 10 rupee extra you're repaying. So can I say this 10 rupee what you're paying is extra money? Isn't your loss? Yes. So this 10 rupees has to be split over the life of the debenture. Let's say you're issuing the debenture for 5 years. Then this 10 rupees should be split over a period of 5 years. So every year 2 rupees, 2 rupee and 2 rupee you record as the loss on issue of debenture. So that loss where do you record? Under other borrowing cost. Next is what? Discount on issue of debenture. Discount on issue of debenture means what? You are going to issue 100 rupee worth of debenture. How much? At 90 rupees. 100 rupee worth of debenture at 90 rupees. So how much money you have not got it? 10 rupees. Isn't it a loss for you? Yes. That is called as discount on issue of debenture. This also we studied concept in 12th standard again in CA Foundation. Extensively we have discussed. So I'm not discussing one more time. So this is also classifying under where? Other borrowing cost. Yes.
Underwriter's commission for debentures or any.
Underwriting, when I say commission to underwriter, it is for both while issuing the share capital as well as the debenture.
Sir, how share capital will also commission?
Then where it will go? Somewhere else, you have to tell me where.
No, you said it's this thing like finance.
Correct. Finance cost. See, finance cost primarily for funding purposes. Now, dividend equity, dividend preference share can I record here because it is an item of appropriation. Only these two items goes to item of appropriation. Rest all which is happening in relation to funding comes to your finance cost.
Even expenses on funding for equity also.
Correct. 100%. 100%. No doubt about it. In the process of raising the funds, whatever expenditure you incur, it comes out as a part of finance cost. Only exception is what? When you pay dividend to equity shareholders and preference shareholders, those two are an item of appropriation. Hence, you will not record it here. You will record it in the below the line item. What is below the line item? We'll be discussing in the upcoming sessions. Am I loud and clear? That is why I say that doing CA Foundation is very, 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 very essential. You will not believe there's so many people who directly go to CA intermediate level at the data entry stage and they suffer. Primarily, they suffer in the accountancy subject, and secondary suffering is in the law subject. Law, for a second, if you go directly and do in the intermediate, still it is acceptable. Accounting, if somebody is coming from a background of either matriculation state board or even CBSE for that matter, if you directly go and sit in the intermediate, boss, you will have a tough time because there's so many topics that you are not aware, which has been discussed at the CA Foundation level. So many things that you extensively added in the foundation level. So that person who's coming from the direct entry route will not be aware of it. So I always tell a point that if you're coming in the CA intermediate to that entry route, you're most welcome. But you have to take care of your basics. You cannot compromise on your basics. Imagine if I start telling all those points again here, will I be able to complete the intermediate advanced accounting on time? The answer is no. Because already I'm going to take the classes for nearly about 200 to 250 plus hours. It might as well go to 300 hours. In this 300 hours, do you think I can accommodate even CA Foundation topics? Here and there I can touch base. If you see the first class of the financial statement, I touched upon the basics. Can I sit and explain the basics in depth? The answer is no. That is why I always tell people, if your fundamentals are not strong, please don't be hesitant. Go back and do the fundamentals. There are people sitting in this forum, offline as well as online. There are people who are done the basics with me. They came to me for data entry. For example, Balaji. He came for data entry. But I told him, no, Balaji, you have to do basics. He's done the basics and today he's sitting. Balaji, how do you feel now? When I talk about these terms, are you able to connect? When I say what is discount, what is loss, are you able to understand what is it? Imagine, if I tell you what is discount, what is loss, what is bonus issue, what is rights issue, does anything strike to you? ஒண்ணுமே தெரியாது. Back முடிச்சிட்டு இருப்போம். So, though you have a Brahmastra, that you can come to CA inter that into level, but that should not be at the cost of compromising your basics. Please go back to your roots. Never skip your roots. Yes.
Why will you have underwriter for debentures? There is no minimum debentures.
Underwriting commission, primary it is for shareholders only. The debentures minimum subscription is there or not there?
Not there.
You've studied, no? Okay, let me clarify this point and get back to you. Primarily, see, underwriter has been allocated for those person who is not, for example, there's a minimum subscription clause that has been put by SEBI, which is 90% of the application money. Okay. Now, if this minimum application money is not received, then you have to refund the entire proceeds what you've got it. Now, in that case, what happens? You are appointing an underwriter. If you feel that there is a short subscription going to happen or under subscription going to happen, the underwriter comes and fills in the gap. So 90% of the application money is a minimum subscription clause laid down by the SEBI for the purpose of share capital. Now the concern what is raising is that do we have a minimum subscription clause for the debenture holder? In my opinion, it is there, but we can get it cross-checked. It can be cross-checked. He's got a genuine concern. We'll get it cross-checked. As of now, keep in mind this is underwriter's commission for share capital. Debenture part I'll clarify. Is that okay with all of you? Wonderful. Now can I go further? Now all these expenses put together is called as what? Finance cost, total finance cost. Now, guys, under the expenses category, what is the first item of expenses? Cost of material consumed. Second is purchase of stock in trade. Third is change in inventory. Fourth is employee benefit. Fifth is finance cost. Finance cost. Can you change this order? No. Can I write purchase of stock in trade first and cost of material consumed second? No, because this is the order that has been given by the Companies Act. You have no authority to alter the order. But if cost of material consumed is 0, you can skip this entirely. And you can write this as a first item only when in the absence of the previous item. This is allowed, but you cannot change the order. So what is the first item? Cost of material consumed. Second item, purchase of stock in trade. Third is changes in inventory. Fourth is employee benefit. Fifth is finance cost. Sixth is depreciation and amortization. Depreciation and amortization. This I will do when I teach you the property, plant, equipments. Tangible and intangible assets. That time I'll teach you how the disclosure needs to be done for this. The last item is other expenses item. Means what? Any item which does not fit in the above 6 category. Any expenditure, if that does not fit in the above 6 category, will come to the rescue of the 7th category. This is called as a residual category. If you do not find place in any of the above 6 houses, you can come to my house. Who is saying this? Other expenses say. Let's have an understanding that this is also a format that has been given by the Schedule 3. The first item is consumption of stores and spare parts. Stores and spare parts, you have habit of 2 types. If the loose tools, stores and spare parts is of specific nature, you have to classify under property, plant, equipment. Where have we discussed this? In CA Foundation, Accounting Standard 2, Valuation of Inventory. If you come across any loose tools, spare parts and stores item which is specific to any particular asset, then it has to go to your property, plant, equipment. Who is saying this? AS2, AS10. But if there is any loose tools, stores and spare part which is of general nature, means I can use it for multiple purposes. Example, oil. I have grease and oil. I can use it for multiple machineries. That will be a part of your inventory as per AS2. Now this inventory when you consume, can I record this as cost of material consumed? Is the greasing oil my raw material for manufacturing purposes? No. So now if I have a machine, for greasing that machine, for oiling that machine, I put oil. So I'm consuming that oil for smooth running of the machine. That will now be recorded where? Under other expenses category. Where in other expenses? Consumption of stores and spare parts. These are those stores and spare parts which I will use it for multiple purposes of the assets. But if there is any spare part which is specific to that particular asset only, I cannot use it for any other purpose. For example, there is any particular die which can be fit only in that particular machine, then that die is a part and that will be classified as property, plant and equipment. So again, I'll be talking about these both where when I do AS10 and AS2 respectively. As of now, just remember, there are certain stores and spare parts. There are certain stores and spare parts, nut, bolt, etc., which I'm using for multiple general purposes. When I consume them, those are my consumption expenditure. So I should record under other expenses category. Am I loud and clear? It will not go to raw material. It will not go to your raw material. What is raw material? Which I'm using for manufacturing process. That is raw material. This is what consumption of stores and spare parts. Any problem in this? Online people, any problem in this?
No, sir.
Next comes power and fuel. All of you understand what is power and fuel? Power generated at the factory. Power charges at the factory level. Fuel for your gensets, etc. That is your factory charges. Some people have their own, what you call, not this. They have this own EB power generating unit. Solar you have, yes, this expenditure for that running the solar. Some people have this thermal power plant, yes, biogas power plant. So all these are what power generating sources.
Solar, will it not be EV?
I'm talking about the consumption, the routine expenditure for that solar. Solar, if you have a plant set up, that is your asset. Now, for that, you have to do general work. No, for power generating, you have to do some general expenses. No, routine expenses. Those are coming into power and fuel. So, if you're having genset, then the fuel that you put for the genset is coming into power and fuel. Then comes the rent that you pay for the factory and the offices. Repair. Now, here the Schedule 3 is told that you have to disclose the repair separately for the buildings, plant and machinery, another category. If it is a vehicle, show for vehicle separately. This is a compulsory disclosure by the Companies Act. Now, let's suppose you're going for a audit in a company. That CA or that accountant, what they've done is they have shown the entire repair in one shot. Can you do that? No, you should ask them to show the repair separately for building, plant, machinery, and other category. Am I loud and clear? Next is insurance. Insurance you pay. The company pays insurance. What type of insurance is there? The insurance that you take for the benefit of the employee. Medical insurance. No. So any kind of insurance is coming under this category. Now there is a debate. That's why I told you there are certain items which is debatable. So some people say that whatever insurance is there, you can put it here. But you might also debate that since this insurance for the benefit of the employee, I will take it to employee benefit expenses. Debatable. That's why I told you there are a lot of items where the clarity is not there. Ambiguity is there. So for that purpose, what it is supposed to refer? Guidance note that is issued by the ICAI. In some places, still the guidance note is not there. So you have to use your professional skepticism. This word you'll come across in your audit. You have to use your professional mind and accordingly you have to disclose it. So in some financial statement, if you see the insurance paid for the employee benefit goes under employee benefit and some comes here also. Both are okay. Both are okay. See, 99% you have to stick to the format. I agree. But 1% you can deviate based on your professional skepticism. Means what? Based on your professional experience. What you feel appropriate at that particular moment, you can make it light deviation. 1% deviation is allowed. Am I loud and clear? All in people, am I loud and clear? Insurance
Yes,
that you pay for the medical claim for the employees. Insurance that you pay for your stocks. Fire insurance for your stocks. Fire insurance for your asset. Theft insurance for your stock. Theft insurance for your asset. All that is insurance expense, which will come here. Which will come here. Only one point which is debatable is your insurance for your staff. That also could be a part of your employee benefit. Then comes rates and taxes. When I'm talking about taxes here, which taxes are we talking about? Are we talking about GST here? No. Are we talking about excise duty here? The answer is no. Which taxes are we talking about? We are talking about the local municipal taxes. For example, let's say this entire building is of Kalpaveksh Academy. We own it. So you have to pay corporation tax. You have to pay property tax. So that is called as, water tax. All these are part of your rates and taxes. So all the municipal, that is local corporation related expenditure, that is called as rates and taxes. Rates and taxes include municipal taxes, etc., but excludes taxes on income. Income tax will not come here. GST will not come here. Excise duty will not come here. Any tax on which you can take input also will not come here. Am I loud and clear? Miscellaneous expense is one part. Next is what? Provision for loss of subsidiary companies. This you will discuss in the upcoming sessions. Payment to auditor. Very, very important point. This came as a disclosure of late. This was not there in 2013. The Companies Act was very clear here that whatever money you pay to the auditor means what? An independent person. What does he do? He will do statutory audit, stat audit. Whether he does tax audit, whether he is giving consultancy for company law matter, whether he is giving any consultancy for the management services, whether he is giving any other services, whether you are reimbursing his expenditure, what is that? I'll tell you in some time. All has to be disclosed separately under separate head. Now, can somebody tell me why for the auditor so much in-depth disclosure is required? No. No.
High paying, sir.
Huh?
Because of high paying.
High paying, okay. Can you add something more to it?
To curb the expenses, like some maybe they may pay 5 lakhs or 10 lakhs to
Heavy amount.
heavy amount. Or
Split up.
split up that.
Why? Why is the question?
It can be either the taxation will go to IT.
Okay, two things. One is that as a
More to like make him do wrong.
she got it. Now listen to very carefully. Now, auditor is supposed to be the independent person from the company. He is the person who's signing the financial statement, telling that whatever information is being presented in the financial statement, whatever disclosure is given in the financial statement, whatever the financial value is given in the financial statement is true and fair. Means what? It is right. And who believes on your statement? Those 7 people believes on your statement, because as a company accountant, as a company's chart accountant employee, accounting is under my control. So what is happening accounts? I have a complete vision. The next person who's got a vision of the account is who? Auditor. Because auditor is the next person who's got the power to go and peruse the accounts. He can go and scrutinize the accounts. Apart from these 2 people, there are no people who can scrutinize the accounts. Can a marketing department head come and check the accounts of my company? The answer is no. Can a sales VP come and check the accounts of my company? The answer is no. So as an employee, they have a doubt whether the accounts is right or wrong. So whom are they dependent on? Who are they trusting here? Auditor. Bank, government, investors, public, everybody is trusting whom? The one and only auditor. So there's a heavy trust that is reliant on the auditor. But you have heard something in the past. So many fraud cases. So many scams that has been done. Even after GST is come into picture, there's so many CAs who have been extending hands in supporting this crime. And when auditors knows that he is hiding something, is supporting something wrong and unlawful activity, will he do that free of cost?
No.
The answer is no. He will charge some extra money. Oh, you don't want me to tell this? I'll take so much money. Not everybody does it. Not everyone does it. But if at all anybody does it, then you have to disclose the amount separately. Because if the amount that is paid to any person, which is a very unusual amount, let's say everybody is paying auditor. Let's say if I talk about any private company, if I talk about, let's say Deloitte, they charge somewhere in the range of 3 lakh rupees to 15 lakh rupees, 20 lakh rupees, 25 lakh rupees, depending on the company size. Okay. Small company whose turnover is just 10 crores. A big 4 might charge them 3 lakh, 4 lakh or 5 lakh. But if they charge 20 lakh, something is unusual. Or let's say any non-big 4 companies or non-big 4 firms, basically. They charge somewhere in the range of 1 lakh rupees or 2 lakh rupees. But here it is 10 lakh rupees. Should you not get some doubt why 10 lakh rupees is paid to the auditor? For such a small company whose turnover is only 10 crores, why 10 lakh rupees? So Companies Act said that you give the disclosure. You give the disclosure that how much you're paying. So the person who's going through the financial statement, let him know what you've paid to the auditor. Why are you paying excess money? Also, we have to know. You know, we conduct AGM. There's something called as annual general meeting. What is that AGM? Once in a year, we invite all the shareholders to the company's meeting, where the shareholder is being given a privilege to make some important decisions regarding couple of items. In that meeting, we will do the appointment of auditor. APPOINTMENT, appointment of auditor. Because as a shareholder, we have to give him a feeling that you are a shareholder, you're an owner. So you can say, take some decision. We have to give him a feeling. So we tell that there are 3-4 items. You come and give the voting. You decide. Like that, we're giving that power to whom? Shareholder in the annual general meeting. So now the shareholder comes and discusses with the other shareholder to see whether should I continue with this auditor or not. If this auditor is transparent, if he is charging normal fees, we will appoint him. Otherwise, we will replace by some other auditor. So how do I know, as a general public, how do I know whether this auditor is okay or not okay? One, I will look at the breakup. How much fees he is charging? Is he charging reasonable or not? Second, if he is charging unreasonable amount, why? I'll also look into the relation between the auditor and the company. Are they having any influence? So I'll take all the kind of assessment, and that control of the auditor is depend on whom? Shareholders. Because ultimately shareholders depend on whose information? Auditor's information. So the choosing capacity of the auditor, choosing decision making of the auditor should be on whose hands? Shareholders' hands. So the shareholders of the company, once in a year, they're invited to the company in a meeting called as annual general meeting, where they are asked to decide on certain company matters. That the first matter is appointment of the auditor. Second is appointment of the directors of the company. Third, approval of dividend. Approval of dividend. Should we give dividend or not? Should we reduce the dividend or not? Like that, approval of dividend. Fourth one is adoption. Adoption of accounts means what? Whatever the financial statement is signed purvi by the auditor, it has been discussed extensively by the company with the shareholder. In this year, we have done this performance. We did this performance better. We did the performance, not good, not so good. We have taken this kind of decisions. Like that, they will discuss with the shareholders. They'll give updates to the shareholders. So all these things happens in the AGM. So for the shareholder to decide whether should they go with the same auditor or not, this disclosure might help them. Am I loud and clear? So now are you clear why the amount which is paid is separately known? Imagine if it is shown together. Let's say I paid auditor 25 lakh rupees. Now if I write just payment to audit 25 lakh rupees, can I say anybody will start seeing that auditor in that bad perspective? But here, 25 lakh rupees, why have we charged people? 25 lakh rupees, why did we charge? Because from the various auditors, we've taken various services. For stat audit, 5 lakh. For taxation matter, 5 lakh. For company law matter, 5 lakh. For management services, 5 lakh. For other services, 3 lakh. And for reimbursement, 2 lakh. Put together how much? 25 lakh. So when breakup is not there, it creates a confusion to you. It creates a doubt in your mind. But when the breakup is given, oh, 25 lakh for so many services. Oh, ma. Like that, you get a better feel. Clear? So that's why this breakup is very essential. So that the character of the auditor can be understood in the true spirit. What is the last item? Reimbursement of out-of-pocket expenses. What is the meaning of out-of-pocket expenses? Let's suppose you go for any audit to the company. Correct? Now you will pay some money from your pocket. Let's suppose you feel like having from Domino's. Correct? No? I went to Hyderabad. Audit. I went to Domino's for dinner. So dinner they have to sponsor. Dinner what they give I didn't like. I said I don't like this. I went to Domino's one day. One day I went to McD. Bill I got. Whenever you get bill, you feel sad. Oh shit, I have to pay so much. But in client place, you never feel sad because this has been reimbursed by your company. Correct? Jolly life. I'm telling you, you will get outstation audit. Enjoy. I prayed God, 3 years of articleship, please give me only outstation audit so that I can roam at the cost of the client. Train charges, third AC, second AC, borne by client. Food, accommodation, aircraft, everything. AC cab, all that on the expense of the client. Now, if the client pays it, that's a direct expenses. But sometimes you pay it because client that point of time, he doesn't have money to pay in hand at that point of time. Poor fellow should have every time in pocket, no? In hand. So you paid the money and later you can get it reimbursed. So reimbursement separately to be shown here. Am I loud and clear? Reimbursement should be shown separately here. Online people, am I loud and clear? Hello?
Yes,
Yes,
sir.
sir.
Next is what? Advertisement and sale promotion. Communication cost, traveling and conveyance, printing and stationery, legal and professional fee, legal and professional fees. If there is any legal charges to be paid to the lawyer, if there is any case that is being fought by you, right? You pay the fees to lawyer, any legal charges or professional fees. For example, you have to pay professional fees for getting legal opinion from a CS, company secretary. So that comes under professional fee, legal and professional fee. The fee of the lawyer, the fee of the company secretary will all come under legal and professional fee. Administrative expenses, bad debt, net increase or decrease in provision for doubtful debt. Provision for doubtful debt. In the P&L, we had no two provision for doubtful debt. By provision for doubtful debt, that will come here. If it is expense, it will be positive. If it is reversal of provision, it will be negative. So about this, we have discussed extensively where one in 11th standard, second time in CA Foundation. When we did final accounts, we discussed provision for doubtful debt in multiple places. Not just one question. We saw different question, different scenarios as to how to compute the provision for doubtful debts. Am I right or wrong? Am I right or wrong? Yes. Bank charges, discount allowed, donation. If you're paying any donation, that is a part of your other expenses. Foreign exchange loss, in the process of making foreign payments or foreign receipts, if there is any loss on exchange, it will be recorded here. How this foreign exchange loss is to be done, there's a separate accounting standard for this. Net loss on sale of scrap fixed asset, net loss on sale of investment, net loss, that is income is less, loss is more, the net loss will come here. Share of loss of the firm, vehicle expenses, CSR expense, all will come here. What is the meaning of CSR? Corporate Social Responsibility. Now, Companies Act 2013 has compelled certain category of the company to compulsory do expenditure towards the public. You have to do something for the public welfare. Who is imposing this compulsion? Company law saying you're a big company, no, you have a lot of money, no, what will you do with that money? Use some part of the money for the welfare of the public. So imagine now KVA Limited is, now summer season is coming. Now a lot of people feel thirsty. So in Coimbatore, let's suppose at 20 places I've set one, what do you call it, spot place. In that, two things I'm serving. One is water, second is buttermilk. Correct? No, this is for public welfare. So for that, I'm spending 2 lakh rupees a month. So how much for a year? 24 lakh rupees. That is my CSR expenses. Am I loud and clear? I am conducting a medical camp for the people, free of cost. But will the doctor come free of cost? Will the medicine come free of cost? No. So the money that the company pays towards the doctor and for the medicine, it is a part of your CSR expenses. This you're doing for a general public. Please understand. This is not for the employee. If it is done for the employee, go to employee benefit. If it is done for a general public, it is called as a corporate social responsibility, and you have to give a disclosure of this separately in your notes to accounts as well. What is that? Also, I'll be discussing in the upcoming sessions. All these put together are called as other expenses. Am I loud and clear? All in people, am I loud and clear?
Yes, sir.
Yes, sir.
Yes, sir.
One big amendment here, one big update here. So far in 12th standard, we said that preliminary expense is a part of your extraordinary item. Now it is a part of your other expenses. Oh my God. Do not put your preliminary expense under extraordinary exceptional item. It has to now be a part of your other expenses. Am I loud and clear? Online people, am I loud and clear? Hello?
So in 1 year itself,
Yes, sir.
Now, that how do you write off? Whether in 1 year or multiple years, that is something which you have to discuss. But I'm telling you, preliminary expenses is no more a part of your extraordinary item. It is a part of your other expenses. Am I loud and clear? Now I have to discuss only with you what is extraordinary, what is exceptional item. But we are feeling too much bored. So we'll go to some practical questions and then we'll come back to the theory part again. So we saw a couple of questions in the last class. Example 1 is done, 2 is done. Now let's do example 3. After example 3, I'll give you a break. After example 3, I'll give you a break. Online people all said, can we do it?
Yes, sir.
From the following information,
Yes, sir.
prepare an extract of statement of profit and loss for the year ended 31st March 25 as per Schedule 3 of Companies Act 2013. Present the necessary notes to accounts as may be applicable. My question goes to all of you. This financial statement you're preparing for which financial year? Which financial year? 24-25. This is prepared as per which schedule? Schedule 3. This is as per which division? Division 1. Now, The first item is salary and wages. Salary and wages comes under which category of expenses? Employee benefit expenses. Before that, how many total category of expenses? 7 category of expenses. First category, cost of material consumed. Second category, purchase of stock in trade. Third category, changes in inventory. Fourth category, employee benefit. Fifth category, finance cost. Sixth, depreciation amortization. Seven, other expenses. Correct? The more you revise, the more you recall, you become pro at it, like me. So salary and wages is a part of your employee benefit. Correct? Contribution to provident and other funds, which is a part of your salary, will go to your employee benefit expenses. Now, expenses on employee stock option scheme or employee stock purchase plan. This is part of your employee benefit. Staff welfare expense, employee benefit. Interest expense, finance cost. Other borrowing cost like brokerage, finance cost. I know we'll ask it. Contribution to provident fund as a part of the salary means the amount that the employer contribute is also a part of salary only.
But if it's a part of salary, it's employees' contribution.
हाँ.
So पहले से salary wages में included है.
मैं क्या बोलता हूँ? This is all debatable. If I remove this down, no, there's no confusion. I took this question as it is. I'm again telling you, there are certain points in your financial statement which can be creating a debate. You will find this problem in your practical life. We've been debating in the past, we're debating even now, we'll be debating in future also. You will see there are certain items which will have a differential treatment by different auditors. The difference is what? 1%. To some items where people have a different opinion, please understand, the person sitting in the room creating this company law, whatever knowledge he had got at that point of time, whatever experience he got at that point of time, he created that format. If you ask me, the person who's working at the ground level, like we can add a lot of value to it in the structuring of the format. If you and I are asked to sit, no, we can create this entire format in our own way. Do you agree with me? I will say 7 by 7 expenses category. Put 15 expenses category was what I will say. And I'll justify also why I need 15 category. Able to follow. But unfortunately, here the format is given by whom? Schedule 3. At so many places, they have not given the proper explanation. That is why Institute is coming here, stepping in, providing what guidance. Note. In that also people are debating. Because people have their own professional skepticism. People have their own point of view to justify. Are able to follow? So, I'm telling you, 1%, 2% cases could be there where you can have a different perspective. Accordingly, also you can prepare the financial statement. So 99% the format should be same. 1% deviation here, that is acceptable, boss. From the examination point of view, you keep it very simple that what is employer contribution will come here, employee contribution will go to your salary and wages. But if you feel contribution to PF, employee also I should take it here, you can put it. Nothing wrong. There's no hard and fast rule is what I'm trying to say. Because even between the professional people, there is a debate. Then who are you and who am I? Yes.
People should not wrongly interpret whether the company has contributed this much for PF. So
that is what you had one point. No, that is what I'm trying to say. People have their own perspective. Some people say that whatever PF related expenses there, show everything, whether employee, show everything under contribution. Some people will say, now how will I show employee part here? Because contribution means what? The contribution done by the employer. So I should show only that part. Some people opinion is of what opinion? Contribution means what? Both are contributing. No, employer also contributing, employer also contributing. In the why எப்படி வேணா பேசும். இப்படியும் justify பண்ணா அப்படியும் justify பண்ணும். So can we go about our emotions? No, we have to go with the schedule 3. Am I loud and clear? We can justify in any possible manner. So my point is never debate. Apply your mind. What best you can do at that moment, go with it. Now, how do you present it? First heading, please. All of you, I won't write, all of you write it. Those who want to take a photo can take a photo. I'll share this PDF after the class in the group. Now, statement of P&L and extract. Please write in the bracket. There is no need to write this. There is no need to write this. Under that expenses, sorry, under that heading particulars, note number 31st March 25. Please write 31st March 25. And previous year is what? 31st March 24. So can we skip the previous year column? You can skip, no problem. Under that, what will you write? Whatever the expense is given, that only you will write. So first is what? Employee benefit. Second is finance cost. Give note number. Why 5 and 6? Because previous to that we did two questions where we had note number 1, 2, 3, and 4. This question is continuation of example 1 and 2. Hence, I have continued this as 5 and 6. Any problem? Online people, are you all doing it?
Yes, sir.
Everybody, please respond.
Yes, sir.
Everybody.
Yes,
Yes,
sir.
sir.
Yes, sir.
Now, don't write this amount directly here. Wait. First, we'll go down. Write heading notes to accounts. Notes to accounts. You may have a doubt, sir. Can I write this as employee benefit 1, note number 1 and 2? You can do it. But I gave the logic why I'm giving continuing number, because after 2 more questions, we have a question where I'll ask you to consolidate all the above items in one single P&L. So in that case, it becomes a series of continuous note number. That is why thinking that I gave a continuing note number. Employee benefit. Under that, what are the 4 categories? Salary, wages, contribution to provident and other funds, expenses of ESOP, and staff welfare expenses. One, two, three, 4 items. Do it first. Do it first. Next is finance cost. 2 items: interest expense and other borrowing cost. Sir, in that they put brokerage. They put as brokerage. So please mention here brokerage. No need to give the other items. If only one item is applicable, just write the applicable item. No need to disclose other items. Only brokerage. Done? What happened, Britain? You wrote under employee benefit brokerage.
No, I was writing that.
Go to copy paste that. Question இல்லைன்னா photo எடுக்க சொன்னேன்ல. क्या वो निशी मेरे को घूर के क्यों देख रही है? कुछ नहीं. ओके. कभी भी सर को प्यार से देखना. पुअर फेलो सर. If you all घूर घूर के देखोगे तो I'll get scared, no? Done? Come back and fill your main extract. 1,02,000 and 2,400. Drawings. Okay. She's asking, sir, drawings does not come anywhere, sir. My dear, what is the nature of drawings? Drawings is expense. I'll send back to you to 11th standard.
Depends, no.
What depends? Iman, the cut it. Oh, hello. Whether it is companies or not, when did we record drawings in expenses? Drawings is a part of capital family. My throat is tired. To increase capital credit, to decrease capital debit. Drawing decreases capital, to decrease capital debit. Oh my God.
अब continuous classes इसके लिए नहीं थोड़ा
I'm taking continuous classes, Amma. For that, she got tired, Amma. Her brain stopped functioning and she's asking this type of question. Amma, this expression கொடுத்த பாத்தியா கடைசி வரைக்கும் நான் மறக்கவே மாட்டேன் நானு.
So what about bonus share?
Bonus share expenses. What do we do? Bonus share expenses. Bonus you don't get any. You don't get any. Yeah, my employee is ma pogu. Bonus share is issued to the shareholder. It's not the employee. Amma, she's asking bonus share related expenses. No, other expenses. Bonus la paisa. Where is paisa coming? Funding. Where is funding coming?
But for that, you need CA for all the.
You have to wait for that. You'll get a clarification in the upcoming classes. Hold on. I'll give clarity. Wait. Question. I'm coming. Okay. நீ கேட்ட கொஸ்டின் தான் நியாயமா இருக்குமா? இவ கேட்டா பாத்தியா? எனக்கு கண்ணுல தண்ணி வந்துச்சு. Guys, drawings is never the expenditure of the business. Done? We'll take a quick break of 4 minutes. We'll come back and continue with the next question. Guys, from here, only practical questions till we complete the class today. So be ready. Thank you so much. We'll take a short break and come. Yes, people, welcome back to the break. So let's continue. Let's do the next question. It says that from the following information, prepare an extract of statement of profit and loss for the year ended 31st March 25 as per Schedule 3 of Companies Act 2013. Present the necessary notes to accounts as may be applicable. Now, they've given some data. If I come below, no information is given. Something is missing here. Depreciation related information is missing. Will given now. One second, Gana. For that, I have to put rates here. No, swing I can do later also. Rates are very important. Where is your sweater?
I'm supposed to sit there.
Height and people are disturbing. Then you have to take corner seats, bus. I'll come to that later. We are doing it in a simplified manner now. Now, building, what is the classification? PPE. Very good. I meant to discuss the balance sheet item, but since you know this, I'm asking casually. Property, plant, equipment. Plant and equipment? PPE. Very good. Vehicles? PPE. Furnitures? PPE. Actually, it's property, plant, equipment, and intangible assets. Brand. You purchased a brand and you have paid this much money. It's an intangible asset. So it is property, plant, equipment, and intangible asset. Under that, the classification is intangible assets. Computer software, PPE, and intangible asset. Under that, the classification is intangible asset. Insurance means nothing mentioned means insurance premium paid. So it is other expenses. Sundry debtor, current asset under trade receivable. Trade receivable. Those who don't know what is trade receivable, property, plant, equipment, do not panic. I have not taught you yet. Why are we answering? Because these are my people who know since 12th standard all this classification. Hence, I'm jollily discussing with them. Those who don't know, don't panic. I'm meant to discuss the entire balance sheet with you. Payment to auditor, other expenses, and a specific disclosure requirement is given. You have to adhere to that also. Provision for doubtful debt. Nothing mentioned means creation of provision. It is a loss item. It goes to your other expenses. Consumption of stores and spare part. Other expenses. Power and fuel. Other expenses. Rent. Nothing mentioned paid or received. You have to check which column it is. If it is in debit column, rent expenses. Credit column, rental income. Nothing mentioned means always expenses. Which category? Other expenses. Repair to building. Other expenses. You have to be very careful. Under repair, you have 3 categories. First is building, plant and machinery, and then will be other categories. Repair to machinery, other expenses. Rates and taxes, other expenses. Miscellaneous expenses, other expenses. So how many classification? Depreciation and amortization and other expenses. Now, depreciation rates, I forgot to give in the PDF. I'll add and give it. For building, it is 5%, PPE 20%, vehicle 20%, furniture and fixtures 10%, brand 10%, computer software 60%. Now, listen to me very carefully. Listen. Don't do anything. The format of the what do you call it? Tangible asset depreciation is extensively large. I have not taught that yet. When will I teach that? When I come to property, plant, equipment. Now, for this purpose, I am doing this format in a very simplified manner. In exam, looking at the time factor, you can concise the presentation of PP or you can do as per the schedule 3. But schedule 3 format of PP is very extensive, very large. In examination point of view, it is not advisable to do in that way. You can short it wherever required. So I have presented the shortest format which you can follow in the examination, nothing wrong. So now here what you do is that you have a separate category of asset. In that we have one category, property, plant, equipment, which is nothing but a tangible fixed assets. And we have intangible assets. Two categories are split. Any problem in that? Under that you have building, plant and equipment, vehicle, furniture, fixtures. Any problem? Then next column you can put for rate column. You can put for rate column. Am I allowed in there? In the original format, when the rate column come, no. What is original format? How to prepare? I'll discuss when I come to your balance sheet item under property, plant and equipment. Properly, I'll discuss the format. If you don't believe, see this. This is the original format of the tangible and intangible assets. Cost of the asset details, original cost, addition, disposal, original cost at the end of the year. Like that, this is extensive format. Important to understand. So I'll teach when I come to tangible assets. I will explain all that when I come to PP, not now. I'm trying to do this question in the shortest and the sweetest manner. Do you have any objection? No. Now, the value that is being given in your, where is the question? Here it is. Building they have given. So what do you assume? Is it at the WDV or the original cost? It is the WDV or original cost? If you're saying original cost, then what you should have here along with that? Provision for depreciation. So in the trial balance, you have provision for depreciation, accumulated depreciation. It is an indication that they have followed provision for depreciation method. In 11th standard CBSE, in CA Foundation, we studied there are two methods for accounting depreciation. One is normal method, second is provision for depreciation method. When I started the intermediate, or well before that, almost I think 1 month before that, 20 days before that, in group I put a list of chapters which you should know before coming and sitting in CA intermediate. In that, there's one chapter called as depreciation. You should be familiar with SLM method. You should be familiar with WDV method. You should be familiar with the normal method of accounting depreciation. You should be familiar with provision for depreciation method, asset disposal method, revaluation of asset, change in estimated useful life. These are all the basic requirement of your CA intermediate. So please tell me, you have discussed this extensively where? In CA Foundation. Can I sit and discuss this point one more time here? I can revise it, but can I teach it here? No. Guys, what are we studying? Advanced accounting. The name itself is what? Advanced accounting. Means what? It's not basics. Basics is covered where? In the foundation level. 11th and 12th, if you have not studied properly, the CA Institute gave you second opportunity where? In CA Foundation. Intermediate is the continuation of CA Foundation. Where you left foundation, from there only intermediate continues. So therefore, there are certain things you should be knowing is what is our belief when we teach at the intermediate level. But inside story, I know that you don't know anything. Correct? So that is why we provide the basic classes wherever required. Please watch it so that you can manage the CA intermediate level properly. So now here you don't find provision for depreciation anywhere. So here they followed the normal method of depreciation. Under normal method of depreciation, what is the journal entry for depreciation? Depreciation account debit to the respective asset account. So definitely this 48,000 is at cost or book value. Sorry, at WDV. It is at WDV. Am I clear? Depreciation has to be done. They are told. How much is the depreciation percentage? 5, 20, 10%. This is to be done at WDV. This should be done on WDV. If I have to do this on SLM, then the question should have produced the original cost. The question should have given you the original cost. I told you to depreciate. Building how much? 5%. Now, will you apply WDV method or SLM method? If it is SLM method, then the question should give you the original cost of the building. They should give you the original cost of property and equipment, plant and equipment, sorry. But that is not given. So obviously, what is the assumption here? These percentages are on to be applied on the WDV. So what method of calculating depreciation? WDV method. What method of accounting depreciation? Normal method of accounting depreciation. Am I loud and clear? Any problem here? So now people, second column is the rate column. Second column is the rate column. Next column is the original cost of at beginning of the financial year. The word original cost is taken by because it is being set in the format. But technically, this is what book value. This is the book value. This is the WDV. Am I loud and clear? Right? Now, what is the depreciation on that? 5% on 48,000. How much it is? 2,400. How much it is? From 48,000, if I minus depreciation 2,400, what is my balance cost? 45,600. So WDV at the end of the year is how much? 45,600. Will you present like this in your Schedule 3 financial statement format for the company? No. In exam, can you adopt this shortcut presentation? The answer is yes. Considering the time factor, you can definitely do it. Next, same way for property, plant equipment, rate is 20%. What is the WDV? Opening balance 24,000. On 24,000, 20% is how much? 4,800. So from the 24,000 opening balance, if I minus 4,800, what is the written down value? 19,200. Vehicle 20%. Opening balance how much? 6,000. On 6,000, 20% is how much? 1,200. If I minus it, how much is the remaining book value? 4,800. Furniture fixtures, what is the ROD? 10%. What is the opening balance? 7,200. On 7,200, 10% is how much? 720. If you minus, how much will you get? 6,480. Same thing you have to do for intangibles. Any problem? Now we are preparing the extract of the P&L. So what is relevant? Which column is relevant for me? The depreciation and amortization column alone is relevant for me. So you have to prepare this tabular column and come back and substitute here depreciation, amortization. Note number 7. How much? 18,000. What is the breakup of 18,000? 9,120 of the tangible asset depreciation and 8,880 for intangible asset amortization. So depreciation, amortization put together 18,000. I don't want you to copy now. Just observe what I've done. I want you to remember and reproduce on the paper now. Depreciation, amortization is clear. Next is what? Next is other expenses. Other expenses, this is how you will classify. This is how you will classify. Any problem? Consumption of stores and spare parts, power, fuel, rent, repair. Under repair, you have two classification. Building and plant and machinery, both. Payment of auditor, under that, it is auditor's fees. Separately, 3,840. And then net increase in the provision for doubtful debt, 720. Have you seen the answer? Have you seen the answer? Now, what we are supposed to calculate is provision for doubtful debt. Keep this part pending. Remaining, I want you to work out. Now. Do it fast. First, write heading. Statement of profit and loss in bracket and extract. Yes. For convenience sake, I'll take this rate and copy paste here also, so that it becomes easy for you. Please do the depreciation amortization calculation first. Note number 7, depreciation and amortization. Correct? No, note 7 only, no? Yes. In that first column will be particulars column where you have the list of all the assets. What is second column? Guys, respond. What is second column? Rate column. Third column is the opening balance. Fourth column is depreciation. Final column is the closing balance. Keep that in mind. Separately for PPE, separately for intangibles. So you have to show it separately because this is depreciation. P&L में क्या आएगा? Guys, in P&L, you don't have to show depreciation, amortization separately. You have to show it together. So if the users of the financial statement wants to know in this 18,000 how much is debt and how much is amortization, they'll go and refer the notes to accounts. That is it. They'll come and check here. Automatically, they'll get to know how much is for depreciation, how much is for amortization. So in the P&L, you'll give the summary. Please understand, trial balance, P&L and balance sheet is a summary of the financial statement. Do it fast. Sorry. All the people, are you all doing it?
Yes, sir.
Yes, sir.
Yes, sir.
The first one was particulars. Depreciation on the table.
But why do you want that? What are you not able to see? Values. नहीं करता हूँ ना नीचे में. What do you want this for? Taking a photo. Anyways, I'm going to send the PDF.
Solution on the table.
Other expenses maybe
Other expenses you can stick on to the order in the real life, but in exam, if you're not able to stick on the order, you're jumbling it, it's okay. For other expenses, order can be jumbled, no problem. For examination purposes. Done? Done with this?
So my rate for computer rates very simple. Rate for computer.
That's okay. That is the reason behind it. I'll tell you why. Done? You may have a doubt, sir, can I change the order? You can change the order for other expenses, no problem. In the exam, it is allowed to be changed. Done? Fast, people. We have 2 more questions to do. I know there is some different data. Leave it. For provision for total debt, always do this ledger. Is a provision existing already in the balance? Provision for doubtful debt already 240 is there. What is the nature of provision for doubtful debt? It is a liability. It's a provision, right? You subtract it from the asset. So this is the ledger's opening balance. So provision being the liability item, the opening balance will come on which side always? Credit side. So by balance brought down 240. Am I clear? Now the question further says that you have to create a provision. You're supposed to create a provision of 10%. I don't think so. I've put it here. I'll just rephrase this question. Create a provision for 10% on debtors. Correct? Create a provision of 10% on debtors. Which means I told you in the foundation that whenever the question says create, maintain provision on debtors means this is a hint given to calculate your closing balance of the PDD ledger. So now come to PDD ledger. I have to calculate this balance. So how do I calculate this balance? For that, there are certain steps I gave you in the CA foundation level, and before that I gave you in the 11th CBSE. So same format we're going to follow. Calculation of the balance category of the PDD ledger. First, you will take the debtor from the trial balance. With that, you have to do 3 adjustments. One, you will minus the bad debt which is given in the adjustment. You have to minus the bad debt which is given in the adjustment. The logic of this has been explained in the basic classes, foundation classes. Then you have to minus good debts which is given in the adjustment. The logic of good debt is also been explained in the basic classes. Then you do adjustment for debtors. Means what? In the adjustment they'll tell you there's a credit sale entry which is not passed. There's a debtor payment entry which is done but not passed. So any adjustment related to debtor which is given in the adjustment, that impact you have to give. So it is plus or minus depending on the adjustment. Finally, after that, you'll get one balance of the debtor. You get the final closing balance of the debtor, genuine closing balance of the debtor. On that only always a provision is being created. In our example, there is no new bad debt, there is no good debt, there is no further adjustment of the debtor. And hence the balance of the debtor is how much? Same 9,600. On that, if I create 10% provision, what is my closing balance? 960. So whenever the question says that create, maintain PDD, it is a hint given to calculate the closing balance of the ledger. Am I loud and clear? Now the opening balance is 240, closing is 960. So obviously you'll get a difference where in your credit side, that is nothing but by P&L 720. My question goes to all of you. What is the meaning of this by P&L 720? This is the creation of the provision in the current year. So this 240 is what? Provision of the previous year. Fear of the previous year. What fear? The fear that this money may or may not come. This 720 is a fear of current year. Both put together, how much is the total fear? 960 is your total fear. Why this is called fear? What is the meaning of opening balance? What is closing balance? What is by P&L? Extensively, in-depth clarification. I gave it twice. Once in 11 CBSE, second in CA Foundation. Multiple questions we have worked on based on this model. Multiple questions, not one or two. We have worked on multiple questions for the purpose of calculation of PDD. If anybody still got a doubt in that, my humble request is go back and refer the video to get a clarity. So here by P&L 720. So this is the provision of current year. Where do you classify under other expenses category? So net increase or decrease in provision 720 will come to your other expenses. Any problem? Any problem? Sorry? Question. For what? Other expenses 12,000. You missed out something. Consumption is 1680, power and fuel 1920. Rent 1200. Repair building is 960. Plant and machinery 720. Insurance is 480. Rates and taxes 240. Miscellaneous expenses 240. Payment to auditor 3840. Provision is 720. All put together 12,000. Are you all getting it? Where have you missed it? The total 10 items. Count is 10. If you see below, there will be count. Average 1200, count is 10, sum is 12,000. You have to know all these tools because you're going to use it in the articleship. Got it? Can I go forward? Depreciation. Done? What man, for this so long you're taking? Insurance.
Yes, sir.
You missed that.
And when you showed that, it was 600, it was like
Let's say always take a pic of it. Done? Still you made a mistake. Very good. Next question. It says that you're required to consolidate all the above questions. Means I discussed 4 examples with you. Example 1, 2, 3, 4. Example 1, we discussed what is revenue from operation and other income. Example 2, we discussed cost of material consumed, stock, purchase of stock in trade and changes in inventory. Example 3, we discussed employee benefit and finance cost. In example 4, we discussed depreciation, amortization and other expenses. All put together, they are asking to prepare the full-fledged P&L. Full-fledged P&L. So this will be your homework now. This will be your homework.
Sir, working note for provision for doubtful debts. You are working.
Working note you want to see? Here it is. Anybody who still don't have clarity on PTD, my humble request, please watch the basic class of CA Foundation. You will get a clarity. You will get a clarity. That's my promise. Done?
Statement of P&L.
Statement of P&L looks like this. Done? Perfect. Now, example 5 is homework. I'll give you this PDF. You can have the questions with you. You can go through and prepare a new P&L with fresh new notes. Because you're practicing, no? So you have to practice properly. Now here, tax rate is 30%. Tax rate is 30%. So now, after total expenses, you will get the next line item called as profit before exceptional extraordinary items, which is nothing but total income minus total expenses you'll get. Okay. In that, add and minus exceptional item. If exceptional items are not there, you can totally ignore this. You'll get what after that? Profit before tax. From that minus 30% tax, you get profit after tax. So all of you know how to calculate the tax expenses. On 97,080 rupees, multiply 30% on that. You'll get 29,124. You'll get profit after tax. Any problem? Online people, any problem?
No, sir.
That you can leave it, no problem. Now, 2 questions. Now, these questions I'll give you as homework, but we'll discuss the classification now in the class with all of you. But this will be your homework. That will also be your homework. Example 6. You are required to prepare a statement of P&L for the year ended 31st March 25 as per Schedule 3 of Companies Act 2013. So it is a full-fledged question. So they're given a tabular column followed by adjustment. Value of closing stock is as follows. Closing stock of raw material, WIP, FG and stock in trade is given. Okay, the adjustment is only for stock. Can I go one by one? Sales, where will you classify? Revenue from operation. Nothing mentioned means revenue from operation. What is the category? Sale of goods, products, sale of goods and products. Opening stock of raw material, where did it go? Very good. Cost of material consumed. Online people, can I expect your participation? Online people, if I'm expecting all of you to participate, am I wrong?
No, sir.
So kindly participate, no? Opening stock of WIP will go where? Changes in inventory. Very good. Finished goods, changes in inventory. Stock in trade, very good. Changes in inventory. Purchase of raw material go where? Cost of material consumed. Stock in trade, purchase of stock in trade. Very good. Salary and wages, employee benefit, contribution to provident fund, employee benefit, depreciation, depreciation and amortization, goodwill written off, other expenses. Wonderful. Goodwill written off is what, Kanna? Goodwill written off is what?
Depreciation and amortization.
Amortization. Will go where? Depreciation and amortization. Rent income. Nothing mentioned means it is other income. Profit on sale of machine. You have to check whether there is a loss on sale of machine. If yes, both of them we have to net off. Profit on sale of machine. Do we have any loss on sale of machine? Yeah, our machine is பிரச்சனையா? Machine ma, machine. Juru juru sound or machine. Ah.
In other expenses, we had loss on sale of asset.
That's what. No, if it is a net loss, it goes to other expenses. For asset, it is always profit. Net profit will go to other income. Losses will go to your other expenses. Investment only debate is there. Am I clear? If you look at the Schedule 3 format, you'll understand. So now loss is not there. This goes to other income. Any problem?
Profit on machinery na other income.
Now carriage outward. Carriage outward. Other expenses. Very good. Carriage outward means what? Transportation charges for delivering the product to customers' place. If you buy AC from Girias, he will transport that to your home. For it is free of cost, but for him he has to pay money. That is carriage outward. Carriage inward, other expenses. Advertisement, other expenses. Dividend income. Did they say this is a financing company? No. In the absence of financing company, this is assumed as non-financing company. Means Kalpavriksha Academy. So dividend income is my other income. Interest. Now you have to be very careful. I have given a debit column and credit column. Now interest is coming in which column? Debit column. So debit means what? Debit all expense and losses. So this is interest expenses. So when you get interest, paid, received, income, expense, nothing is mentioned. You have to see whether this is debit column or credit column. Accordingly, you'll decide. Sometimes they'll put all the debit and credit column in one single line. In that case, the assumption is what? What is the best assumption? You'll treat interest as expenditure only. Since 11th standard, we are assuming. If they give the information in the question, interest, expense, income, nothing mentioned. Debit or credit column, nothing mentioned. Just interest is given. The best assumption is this is expense. Loss by fire. No. Loss by fire is an abnormal event. Abnormal event. Hence, it has to be highlighted separately under exceptional and extraordinary item. Let's come to that now. We have something called as exceptional and extraordinary items. What do we have in this? Here, you're supposed to tell those 7 people that in this business of current year, what are the exceptional expenses? What are the exceptional income? What is extraordinary expenses? What are all extraordinary income has happened in the business? You have to separately highlight. So what is the example coming here? Loss due to litigation settlement. Means what? There is a case that is being put on a company. Let's say there's a customer or there's a vendor, there's a supplier, somebody has put a case on you where you have to pay some 10 lakh rupees. Now, there is a case that has been fought in the court and the court has given the judgment to the company that company, you have to pay now 10 lakh rupees as compensation. The court has already given the judgment. Now, the money that you pay, can I say it is a loss for you, expense for you? Now, where will you classify? Will I classify under change in inventory? Will I classify the 10 lakh rupees that I'm going to pay under finance cost? Other expenses? No. They said that this is an extraordinary event. This is an exceptional circumstances and those 7 people should be aware of this. So they created a separate section called as exceptional and extraordinary item. So any money that you pay because of litigation settlement. What is litigation? What is the meaning of litigation? It's a legal issue which has been fought in the court of laws, and against the company the judgment has come and the court has ordered you to make a payment of 10 lakh rupees as compensation. So it is a loss. So hence it has to be recorded under exceptional and extraordinary item. Any problem? Next example. Loss due to abnormal event. Loss due to abnormal event. There are two types of loss. One is normal loss, one is abnormal loss. Abnormal loss means what? The loss which happens because of your negligence. One more time. So what is loss? So loss is abnormal loss is a loss that happens because of your negligence. Normal loss is a loss which is normally happens in the due course of the business. I always give a classic example, not just once, multiple times I've told you. If at all we are in the business of buying and selling petrol, so you are running a petrol bunk. All the way from Delhi, the petrol tanker comes all the way from Delhi. Petrol is a product which has got a nature of evaporation. So now, if there is a loss due to evaporation, will you consider this as normal loss or abnormal loss? We'll consider that as a normal loss. But imagine if there is some theft happening in between. Somebody in between has stolen 200 liters of petrol. Is it a normal event? No, it is an abnormal event. But evaporation is a normal loss. Whether you do business, whether Ambani does business, whether God does business, evaporation cannot be stopped. It's an inherent nature of the product. So that is a normal loss. If you are a vegetable vendor, if you are a fruit vendor, in your business, the rotten, stage of the product is very common. So whether you do the fruit business or whether I do the fruit business, the vegetables and fruits are subject to getting rotten. So those are my normal loss. But if somebody steals that and goes, then that loss is an abnormal loss. So Schedule 3 says that abnormal event has to be separately reported and disclosed so that those 7 people gets to know about this. It gets into the notice of the 7 people. Hence, it has to be disclosed separately. Loss due to fire, earthquake, theft, any of these are abnormal event which you could have controlled, but you could not take care of it. But you can ask a question here, sir, how can we control earthquake? Correct. When I'm saying that is abnormal event means it is because of negligence. It also means that there's something which is beyond your control also. So earthquake, tsunami is beyond our control. But fire, theft, protection mechanism could have been taken in place or kept in place, but you couldn't do it. So all these are classified as abnormal events. Am I loud and clear? All these are classified as abnormal events to be recorded in the category exceptional and extraordinary items. Am I loud and clear? So we look at the presentation also here. Total expenses, after that profit before exceptional extraordinary item, under that less loss by fire. It is coming under exceptional extraordinary item category, not under any of the above 7 categories. Am I loud and clear? Online people, am I loud and clear?
Yes, sir.
Now PDD expenses means what? Current year provision created. If I just write provision for doubtful debt, that is the opening and closing balance of the ledger. But when I say PDD expenses means what? You remember that by P&L you recorded. That is that entry. Now listen to me very carefully what happens. When you created the PDD ledger, you recorded by P&L directly that 700 rupees. Am I right? You think that the entry is what? In P&L account debit to PDD. Now, this is the entry that we've been learning since 11th standard. But in reality, some people have a differential treatment. What they do is when the provision is created, the entry what they pass is PDD expense account debit. The provision what you create for the current year, PDD account debit to PDD. And this PDD is being transferred to your P&L account by passing a closing entry. So what is my closing entry? P&L account debit to PDD expense. For example, which we did the question which we did now. Now here, if you are combining these both entry and recording, what is the combined entry? When I combine it, this and this is gone. Correct? Now what am I left with? P&L account debit to PDD. P&L account debit to PDD. So if you're passing a combined entry, P&L to PDD, this is what you've been trained in your 11th standard and in CA foundation also. P&L to PDD. In that case, in the PDD, by P&L will come. But some organization have the habit of passing the provision in the PDD expenses account, like any other expenses account we have, For example, we have bad debt. What is the entry? Bad debt to debtor. And then we transfer that bad debt to the P&L. We pass two entry. Similarly, for provision also, some people have the habit of passing two entry. So what entry they'll pass for creating the expense? PDD expense account debit. So what is the PDD expense for the current year? 720 rupees. So 720 and 720. I didn't put follow. 720, 720. So PDD is what? Nominal account. Debit all expense and losses. So where does this go? To your other expenses. And this PDD goes back to your balance sheet by way of minusing from your debtor. To your PDD expenses whenever they give. PDD expenses whenever they give means it is current year provision. This will go to your other expenses category. Any problem? Any problem here? No problem. Now, closing stock of raw material 10,000 goes where? Cost of material consumed. Very good. Whereas these three will go to your change in inventory. Any problem? Any problem? So how does your P&L looks like? I'll just show you. Revenue from operation, other income, respective notes. Now, for revenue from operation, there is only one item. In exam, if you get RF only one item, sale of goods, there is no need to prepare the notes to accounts. You can directly record in the outer column. It is allowed. ICAI allows it. Wherever you have more than one item, then that has to go to your notes to accounts. This is to reduce the time in the exam, save time in exam basically. Other income, we have breakup. So I'm taking it to note number 1. Amount is given. This is called as total income. Like that, cost of material consumed, purchase of stock intended, all the 7 items is given. Put together, they are called as total expenses. And the next item is called as profit before exceptional and extraordinary item. From that, there is an extraordinary loss by fire that you will minus it. You will get profit before tax. If any tax expense is given, minus that, and you'll get after that profit after tax. Correct? So this entire question, can I give it as homework?
Yes, sir.
With proper notes to accounts, you have to do it. Can you do it?
Yes, sir.
For referring purpose, I'll share this PDF with all of you. But don't see the answer. Let's do the question on your own. You will make mistakes. That is to understand where your understanding is lagging. When you refer the answer and do it, no, you will never know what is your mistake. So always when you do the question, do the entire question. You make the mistake, it's okay. Then compare the answer and see where you are actually lacking. That you have to convert into your strength. Next, last 7th example. This is also homework, but we'll discuss this in class. Can we discuss?
Yes, sir.
On it, can we discuss?
Yes, sir.
Yes,
You are
sir.
required to prepare statement of profit and loss for the end of 31st March 25. Sale of goods will go to your revenue from operation. Sale of services, revenue from operation. Now we have more than one item. So we have to prepare a separate notes to accounts. Purchase of raw material. Purchase. Sir, we are not bothered about it. What is it? Raw material. So it goes to your cost of material consumed. Opening stock of FG. Change in inventory. Opening stock of raw material. Cost of material consumed. Salary and wages. Employee benefit expenses. Director sitting fees. Now what is this? What is the meaning of director sitting fees? Now listen to me very carefully. In company, it is very common to have a meeting called as board of directors meeting. What is it called as? Board of directors meeting. In this meeting, all the directors come together and make a meeting, or they form a meeting to discuss upon the very important decisions that they have to take. Now what happens is some director are invited. They are called as executive directors, or some name is given to them. You will study in law. These are those people. They will come in the meeting. They'll provide their inputs for the benefit of the company, and for that they charge a fees called as sitting fees. So where are they sitting? In the board of directors meeting. So it is called as sitting fees, where they give their professional expert knowledge, professional expert advice. For example, let's say I am a very good a knowledgeable person in the stream of accounts, finance, and tax. I don't have my COP, correct? I've surrendered my COP. What is COP? Certificate of practice. If you want to practice as a chartered accountant, you should have a COP. Since I'm teaching on full-time basis, I cannot have certificate of practice. If I have COP, I'll be violating the ethics that has been laid down by the institute. Okay, so I've surrendered my COP. In that case, now I can become the director, executive directors or non-executive director of any company. So let's suppose there is one company by name FFLA Limited. There's some other owner for FFL Limited. But since I have expert knowledge of running the academy, since I have expert knowledge of accounting, finance, and tax, they say that Pratik sir, whenever we do meeting, please come and give your inputs. Will I give the inputs free of cost? The answer is no. So to participate in that meeting, I'll be charging a fees called as sitting fees. Where am I sitting now? In the board of directors meeting. In the board of directors of FFL Limited, I'll be doing it. Am I loud and clear? So that is called as director sitting fee. It goes to your other expenses. It goes to your other expenses. Director salary, other expenses. Gain on sale of Bitcoin. Gain on sale of Bitcoin. Net off, it go to your other income. It goes to your other income. It's just like any other investment, no? It goes to your other income. CSR expenses. Other expenses. Depreciation on PPE. Depreciation and amortization. Dividend income. Other income. Rental expenses. Other expenses. Interest expenses. Finance cost. Be very careful. Don't get carried away by the word expenses. Finance cost. Income in survey. What is meaning of income in survey? Have you seen in movies that the villain or the hero is being raided by the income tax department? Search and seizure. They do a survey. There's something called a search and seizure. During that process, they dig out a lot of black money. Correct? No. That is subject to tax. So those money what is coming as a result of survey, which has to be brought in the books of accounts, no? Because it is found out by the raid team upon the search and seizure or the survey period. So whatever income is generated out of that, it is being shown in your other income. It is other income. Where will you classify? Other income. Can I put it from revenue from operation? The answer is no. It is not a regular event. It is a one of a rare scenarios. So 25,000 rupees is found during the raid. 25,000 means you're not paying much. If I say this is 25,000 crores, then pain will happen. So that is coming as other income, which is subject to tax. Any problems? Where does it go? Other income. Company. Company's hidden income. That is a toilet flush tank. 25,000 was wrapped up in plastic and put inside. Got it? No? Example I'm giving. Yes. Auditor's remuneration. Auditor's remuneration. Other expenses. Separate disclosure for auditor. Category wise. Statutory audit. Taxation matter. Consultancy. Etc. Etc. You have to divide and show. You have to break up and show.
He's not employed.
Auditor can never be the employee. Auditor is always an independent person. Who is auditor? The person who's got COP, Certificate of Practice. Can I become auditor of any company? No, because I don't have Certificate of Practice. If you become CA tomorrow, if you apply COP, COP should be separately applied. Please understand, CA degree is one, COP is separate. CA degree means what? Once you complete the CA examination, you get a CA degree. But if you want to practice, you have to give a letter to institute telling that CA Institute, I want to do practice. Please assign me the Certificate of Practice. Only once you get Certificate of Practice, you can commence your practice. Means what? That is when you can sign the balance sheet of any company. And when you become a COP holder, you have to abide by the rules and regulations that has been laid down by the institute. So where I had my COP earlier when I was practicing, but I had to surrender. Why? Because as per the institute norms, I'm not supposed to teach in a week for more than 7 hours. But I teach every day 6 hours. So if I violate the rules and still I hold a COP, then I will be debarred from the institute. So hence what is the best remedy for me? To surrender my COP. When I surrender my COP, the restriction what is there on an auditor, the restrictions are not there on me. I am free to become the director of any company also. There is no restriction. But can I sign the balance sheet? The answer is no. Can I sign any of the document in the capacity of a CA? For example, you want to come and get attestation from me. Can I sign it? The answer is yes. I have a membership number which is provided by the institute. So any attestation functions, I can put my membership number and sign and seal it. But I will not be allowed to sign on a financial statement of any company. If I want to sign, what am I supposed to do again? Again, apply for the COP. If you don't want it, surrender it. If you don't want it, apply it. No, now if you're an employee CA, you cannot have a COP. So when I was working in the previous company, I was not allowed to hold a COP. So that is when you do audit, no? In audit, you will get to know all the clarity. In audit subject, you'll get to know what are the ethical compliances as a CA, as a practicing CA you're supposed to do. As an employee CA, you cannot have a COP. It is a violation.
This is for independent.
Yes. So here, whenever we say auditor means what? The person who is going to sign the financial statement, he's called as auditor. Will I be called as auditor? The answer is no. I'll be called as a chartered accountant. I will not be called as auditor. Are you able to understand? That doesn't mean that I don't have a CA degree. Some people, oh, the auditor Yapa, na CA pa, chartered accountant. COP have surrendered because of the legal issues that is imposed by the CA Institute. Correct? No, there's some people who cannot have COP. You can be a CA still. You can be a member, but you cannot have a COP. So auditor means itself the person who's signing the financial statement, which means he's a COP holder. So it goes to your other expenses. If the salary that you pay to a CA employee, he will not be called as auditor. He'll be called as only employee. So that salary what you pay to the CA employee will go to your employee benefit. Discount income, other income. Discount expenses, other expenses. Discount income, another name. Discount received. Discount expense, another name. Discount allowed. Transfer fee. What is transfer fee? It is other income. That is right. Other income. What is the meaning of transfer fee? Yes. As a company, let's say you are all my shareholders of the private limited company. You come and tell, sir, I want to share half my shares. I want to sell my half shares to somebody. So I have to do some legal formalities. I have to make you sign on a application where you are telling that I want to transfer the shares from my name to another person's name. And I have to submit those documents to ROC. I have to pay some requisite fee for that. Will I do that job for you free of cost? No. For that, I will charge some money from you. That is called as transfer fee. Any problem? So transfer fee, what you pay is income for me. Which income? Other income. Any problem? Loss due to fire is what? Extraordinary item, which goes to below the line item. Next is what? POD expenses. POD means what? Provision for doubtful debt. Expenses means what? It is your current year provision. It goes to your other expenses. POD liability means what? Provision for doubtful debt, closing balance. That goes as a minus item in your debtors. From debtors, you have to minus it. Am I loud and clear? Online people, any problem? Value of the closing stock, raw material is so much. Where let go? Cost of material consumed. Finished goods, change in inventory. Tax rate 30%. Tell me, people, do you find this question a big deal?
No, sir.
I'll share this PDF. Why are you worrying? I'll put it in group right away after this. No, no, no. I will not give the marking. No. No, no, no. No, no, no. You will not believe. You take your ICA module. The very first or second illustration is a full-fledged illustration with balance sheet and P&L. So what did I do? I'm trying to set basics for you with different small question. There's so many things which just went unexplained in the ICA module. I've put efforts to explain each and every point. So the initial 5 or 6 classes what we are studying now, next 3 classes we'll spend on only balance sheet. Only so that there is a basics I can build for you. There is a momentum that I can set for you to handle the big complicated questions. In the exam, you get a one full-fledged question for 10 to 14 marks. Where you have to do entire balance sheet in P&L one straight shot. Imagine had I not done any of these small questions. Directly I'm doing big questions. You will not be able to digest. You will get diarrhea. You know what is diarrhea? In order that you should not be feeling that discomfort, I've ensured that I'm spending sufficient time on explaining things, doing some small basic questions in bits and parts so that you can build a strong base. Am I loud and clear? Correct, no? So technically with this, I'm done with the P&L part. Yes or no?
Yes, sir.
But is the P&L completely done, sir? The answer is no, because the P&L what we have done so far is taken care of revenue from operation, other income, 7 categories of expenses, exceptional, extraordinary item has been done. But there's something which is still not yet done. Taxes, in a simple language we have discussed. There's something called as current tax and deferred tax, which will be covered in AS 22. There's something called as profit and loss from discontinuing operation, which will be discussed in AS 24. So actually the profit and loss format is little bit more extended, but whatever questions we have from this chapter, the question that is given by ICI has got none of these components. That is the reason I took this as a first chapter. But as and when we go with the upgraded accounting standards, you will also get to do all of these things independently. Am I loud and clear? There's something called as calculation of earning per share, basic and diluted, which will be governed by AS 20. When I do, that time I'll take care of. So in this chapter, what questions IC is going to ask, how much they're going to ask, that much I have covered. Nothing more, nothing less. But there are so many more things that we have to learn, which we'll eventually learn in the upcoming chapters. Comfortable, not comfortable. The pace of the class I've kept medium. It's not slow, it's neither fast. I've kept it very medium level so that every type of student can be accommodated. Because you have different people, below average people, above average people. But I've taken a very average manner so that everybody is comfortable. Is the pace of the class okay? Online people, is the pace of the class okay?
Okay, sir.
Okay, sir.
Wonderful. So next class mostly could be tomorrow, but it's 50-50. I'll confirm it tomorrow morning. If at all we have class tomorrow, it is going to be evening 4:30 to 7:30, where we'll start a discussion on the balance sheet item. If this question requires a discussion, if you feel that this question is tough, I want to discuss with you, I can discuss this question with you. Otherwise, if I give you the answer, looking at the answer you can manage, then I will not discuss this. But if you want a discussion, we can do a discussion also, nothing wrong with it. If you have doubts. If you don't have any doubts with regard to these 2-3 questions that I'm discussing now, we'll directly go to the next format, which is balance sheet format. Am I loud and clear? Chalo. Online people, am I loud and clear?
Yes, sir.
The 2 doubts that has been asked once again. Okay, Yash. Chalo, great. Thank you, people. That's all from my side for this session. I'll see you in the next class with the next new concept and the format. Until then, bye bye. See you. Take care.
Thank you, sir.
Thank you, people.
Thank you, sir.